Good afternoon, ladies and gentlemen. On behalf of the Bombay Chamber of Commerce and Industry, I, Gayatri Vinayak, would like to extend a warm welcome to our members and participants who have joined us today physically and virtually. We would also like to welcome and thank the ScienceZ team for supporting us in this event today. The topic of today's conclave is digitization in the Indian banking sector. While the importance of a developed banking sector for a country like India, which has a huge and ever-growing customer requirement, is widely acknowledged, further concerted efforts from all market participants are required to develop and grow the largely untapped potential. We hope today's insightful discussions will initiate more dialogue on this topic in the banking and financial circles. May I now request Mr. Nilesh Shah, President, Bombay Chamber and Group President and MD, Kotak Mahindra AMC, to kindly deliver the welcome address. Please, sir.
Distinguished Chief Guest, Shri Ajay Kumar Choudhary, Deputy Director, Reserve Bank of India, panelists, moderators, past presidents, members of Bombay Chamber Board, ladies and gentlemen. This is our hybrid model where we are physical as well as digital. Hopefully this will continue to allow us to reach more and more people. First of all, I would like to extend my heartiest welcome to each one of you to the second Banking and Financial Services and Insurance Conclave of the Bombay Chamber of Commerce and Industry, which, as most of you know, is amongst the oldest operating chambers in India. I take this opportunity to thank our Chief Guest, Sri Ajay Kumar Choudhary, for kindly accepting our invitation and joining us virtually. On behalf of the Chamber and my own behalf, I would like to express my sincere thanks to our speakers for kindly accepting our invitation and gracing this event and addressing our members on the subject which is both topical as well as important, digitization in the Indian banking sector. Over the last many decades, the Chamber has played a vital role in the development of Mumbai as a city, including facilitating the setting up of the railways, the Bombay Port Trust, and its continuous contribution towards creating an environment conducive to trade and industry in Mumbai as well as India. Digitization is the way forward. Our next trillion-dollar economy will have large influence from the digitization side. In digitization, we have taken a leapfrog, like we jumped from fixed-line telecom to mobile phone. How do we capture these trends in banking and financial services industry is extremely critical. On one side, we have developed highway through public ownership, on identification like Aadhaar, on payment networks like UPI and Bheem. And on this highway, many entrepreneurs can build their products and ensure complete financial inclusion as well as efficiency in payment mechanism. This creates both opportunity as well as threat for the banking and financial services sector. Companies which will evolve will benefit out of it. Companies which will adopt will benefit out of it. And companies which fail to run with the time probably will become extinct like dinosaur. In today's various panel discussion, we are trying to bring to the attention of our members changing scenario, and I am sure all the learned panelists will be able to contribute to your knowledge. It is with this background that the Bombay Chamber, a pioneer in supporting the development of trade and commerce, under the aegis of the BFSI committee, is organizing this conclave. Now I am sure that you will be eagerly awaiting to hear our keynote speaker. I now hand over to the Compari Gayatri, who will introduce our chief guest today.
Thank you so much, sir, for the enlightening address. Today, it is our privilege to have with us our keynote address speaker, Shri Ajay Kumar Choudhary, Executive Director of the Reserve Bank of India, who is joining us virtually. Shri Ajay Kumar Choudhary is an Executive Director at the Reserve Bank of India, holding the portfolio of the FinTech Department, Risk Monitoring Department, and Inspection Department. He is responsible for the implementation of central bank digital currency, the approach towards crypto assets, potential regulatory guardrails relating to fintechs and techfin, regulatory sandbox operation, RBI Innovation Hub, and all related areas on fintech, including sustainable finance. He also looks after internal governance relating to risk monitoring and internal inspection as second and third lines of defense. Shri Choudhary is a seasoned executive with a unique blend of vast supervisory and regulatory experience and accomplishments. He has a proven track record in banking supervision, regulation, and related fintech areas in various capacities, including leadership positions spanning over 30 years, involving designing and implementing various regulatory public policies, extensive on-site inspections at the field level, and off-site supervision at a corporate level. He brings rich experience with us. I now request Shri Ajay Kumar Choudhary to deliver the keynote address. Thank you.
Okay, thank you. Good afternoon, Mr. Nilesh Shah, President, Mr. Sandeep Khosla, Director General of the Bombay Chamber, distinguished guests from BFSI industry, media, ladies and gentlemen. I am deeply honored to be invited to deliver this address at BFSI Conclave, organized by Bombay Chamber of Commerce and Industry. I'd like to express my appreciation to the Bombay Chamber of Commerce Industry for the invitation to speak on the topic which is quite relevant in the current scenario. I begin my address by quoting a phrase of Mr. Arvind Sankaran, an active member of the Asian FinTech community, who states that, quote, "We are witnessing the creative destruction of financial services, rearranging itself around the consumer. Who does this in the most relevant, exciting way using data and digital wins," unquote. The digital transformation wave brought by the new fintech firms have indeed led to metamorphical changes to the banking and financial sector. In my remarks today, I'll share some thoughts on how modern technology can bring positive change to the financial industry in the coming decade, what risk it brings for consideration, and how the regulator is embracing the wave of innovation brought by these technologies. Now, if you look at the concept of digitization and digitalization, we all know that digitization is the process of converting analog information into digital format, while digitalization is the process of using digital technologies to change how an organization operates. Digitalization can include things like automating processes, using data analytics to make better decisions, or creating digital products or services. Thus, put together, they can be defined as the transformation of society occasioned by the widespread acceptance of tech to produce, configure, disseminate, and transact information. In the last 2 decades, the financial service industry has been strongly influenced by several group of factors, of which the most prominent are digital transformation, emergence of and development of fintech, and regulatory reforms and changes. But the digital transformation is not new to the banking sector. The world has seen a rapid advancement in tech over the past several decades. Let me provide an overview of the digitization and digitalization
which would be the first in the world, I would say, where some kind of AI built on top of satellite imagery combined with financial data, combined with socioeconomic data could be used to unlock capital for the millions of farmers. So that's what we are doing at SatSure. Thank you, Harsh, for having me here.
Thanks, Pradeep. Interesting stuff. And we'll talk about data, new oil, and if you add finance to it, what it does to the oil. I'll move on to Sridhar, who's the founder of Samunati. Sridhar, you want to talk? Oops, what was that? That was just the mic falling off. Okay. Sridhar, you want to quickly talk about what interesting things you guys are doing at Samunati, and especially in terms of digitization from the farmers, making his life more simpler and easier?
Yeah. Thanks, Harsh, and good evening, everyone. My name is Sridhar Ishwaran, one of the founding team member of Samunati. Just to give a background, Samunati, we are a agri-value chain enabler, and the mission of Samunati is to make the markets work for smallholder farmers. So in India, if you see 85% of the farmers are owning less than 2 acres of land, and they are going to make the markets work for them. That's the mission of Samunati. And how do we do that? So there are 3 important pillars for us. One is basically the finance. That's how we are able to give the...
Henceforth, I will refer this as a digitization only, both put together. Journey of the banking sector in India. In India, it has begun with the introduction of computerization in the late 1980s, where there was a need to enhance the customer services, bookkeeping and MIS reporting. A committee was formed in 1988 by Reserve Bank, which was headed by Dr. C. Rangarajan, to review computerization with the banking sector. Then came the phase of liberalization, privatization and globalization, what we call LPG policy reform, which provided an accelerated momentum to the digital journey with the entry of more tech-oriented private and foreign banks in India. The banking system taken a giant step towards digitization with the introduction of internet banking, e-banking in the year 1996-1998. Government of India, by enactment of Information Technology Act 2000, also provided recognition to the electronic transaction and other means of electronic commerce. The Act has been the pedestal of all subsequent digitization effort in the economy. The digitization process got flipped with the establishment of ATM, further developments like telebanking, electronic compensation services, electronic funds transfer system, MICA, RTGS, point of sale terminal, unified payment interface, Bharat interface for money, prepaid payment instruments, tokenization, etc. and etc. are the conduits of the digitization drive of the banking sector. Now, if we look at the digital push, what has been through fintech, the COVID-19 pandemic has forced the products and services in finance for digital transformation. The digitization of finance has been spurred by the tech innovations encompassed in the term fintech. All key financial activities, including lending, deposit taking, insurance underwriting, investing, trading, payments and settlement, all are witnessing their non-traditional manifestations. New and innovative tech provided by fintechs are helping in driving down cost, creating new products and services, and improving customer experiences. In recent times, the topmost concern of all the banks is digitization. Today, banks aim to provide fast, accurate, and quality banking experience to their customers. All over the world, banks are making a tremendous stride towards digitization to cope up with the competition brought by fintechs and provide their clients with the best services. However, new business models, processes, players, all are bringing to fore some newer risks, some of which with the possibility of being systemic. Also, negative externality of these innovations may lead to scenarios where the innovations themselves may stand to hurt the trust of the public in the financial system. Now, let's take a view on how the banking industry may evolve to the digital revolution. The banking system exists on the web of trust, and therefore, traditionally banking is all about customer relationship. With the advent and adoption of newer tech, the stickiness of bank-customer relationship may have the potential to diminish. With the growing familiarity of the tech digital solutions, digital-savvy customers would be empowered to buy the services they need in an unbundled manner and which offers the best terms in the most convenient way and on an increasingly global scale. The banks need to take lead and harness the advantage of the digital world as an opportunity to remain in sync with the modern times. Simultaneously, we should be cognizant of the fact that advances in the financial tech bring with them greater risk to banks' operational and cyber resilience. Breaches in such areas could potentially weaken the fabric of trust in banking. Thankfully, the customer still prefer banks over the tech service provider when it comes to protection of their financial and reliable personal data gatekeeping record. This bedrock of trust gives them an advantage over tech platform which they can leverage to remain relevant in the future. Now, if we're looking at the current status of the progress in digitization, the development of digital public goods and the India stack has improved the adoption of digital ecosystem and catalyzed the digitization processes. The launch of central bank digital currency would pave the way to provide impetus to digital financial inclusion. By leveraging the latest tech, RBI can safeguard the finality of transactions like physical cash and it will ensure the anonymity and data security. The establishment of digital banking unit will also positively contribute to the digitization journey. Reserve Bank of India has over the years encouraged greater use of tech for rendering of financial services. Some of the measures include regulatory guidelines for certain emerging fintech activities such as payment banks, account aggregator, video-based KYC, e-KYC, mobile wallets, prepaid instruments, peer-to-peer lending, invoice-based lending, that is trades, digital-only NBFC, along with introduction of regulatory sandbox to foster responsible innovation in financial services. Taking forward the digitization drive, the RBI and the RBI Innovation Hub has ideated the concept of the digitization of agri-finance in India. The idea was to enable seamless delivery of Kisan credit card loans in a paperless and hassle-free manner and also reduce the turnaround time, cost and avoid multiple visits to bank branches. Eventually, our desire is to develop and operationalize an integrated and standardized tech platform to facilitate frictionless credit to all segments of society for the whole country, wherever rule-based lending is possible with special emphasis on rural and agriculture credit. Now, when we talk about multiple benefits and the initiatives taken by the industry, by the country, by RBI, now we'll also touch upon risk associated with the digitization. It is well understood that financial activities carry inherent risks. Data privacy and security risks are heightened with the introduction of tech that rely on the capture, storage, and analysis of large quantities of data in order to provide improved services. There is a concern of data protection and the risk of data misuse, especially in the context of data-driven business models. Tech advances may also lead to a greater degree of outsourcing to specialized services providers like cloud, analytics, etc., leading to concentration risk and such excessive dependency indicating third-party reliance risk. The cybersecurity risk incidental to the digitization phenomenon has the potential to jeopardize the tech adoption and thus warrant strict oversight to ensure customer protection. The financial system therefore needs to address all these concerns while ensuring that innovations are responsible and their adoption meets the core principles of governance and customer centricity. Now, look at the existence of financial, we all know the existence of financial growth nexus and digitization growth relationship, which are already established in the academic literatures. RBI is mindful of the fact that innovation has enormous potential to make finance fairer and more inclusive, to make the financial system more competitive and healthier, and to make financial regulation more effective and efficient. It may, however, tend to create some new problems as it solves old ones. We all need to strike a balance between encouraging innovation to reap the potential benefits of lower cost, improved transparency, higher consumer engagement, providing a space to the evolution of business model, and ensuring that customers are protected and a level playing field is provided for the sustainable development of the BFSI segment. Before concluding, I definitely may like to flag certain important aspects for consideration of all of you. Number one, banks should upgrade their core banking solution in a manner to provide easily integrate the bouquet of services using advanced technologies such as APIs, as also to meet the growing tech demand on the system. It should enable banks to be aligned with the evolving ecosystem, be future ready, flexible, and available to the customer with multitude of services. Number two, many of the industry participants are focusing on the prospect of collaborating with the fintech players for efficient delivery of financial services. The role of fintech can also be seen in enhanced customer-facing applications, efficient data analytics, alternate credit model, etc. However, while outsourcing any such role to third parties, it is very important that adequate safeguards are established to shield the institution as well as financial stability of the banking system. In line with the outsourcing guideline issued by RBI, the board and senior management must ensure that at no point of time the core activities of the bank are outsourced. The industry must ensure that no concentration risk is established which may risk the stability of the entire system. Number three, going digital is a new buzzword in all sectors. The banking sector all around the globe is shifting towards digitization and are in the process of digitizing various aspects of their operation. It is evident that digitization is transforming the definition of banking. However, it is happening in silos across product, services, operations. It is very important for the banking sector to ensure complete digitization. In the same context, there may also be a need to tweak the bank's loan originating system to ensure the seamless integration of different processes within the LOS. Number five, in all scenarios, customer centricity should always be central to any innovation, which may include being the more informed. It is pertinent that the responsibility of customer protection falls on the shoulders of the industry, and the participants should ensure that all key information is disclosed in clear and timely manner to customers. The impact of cyber incident on customer ranges from mere inconvenience to monetary loss. Therefore, true customer centricity will require that tech deployed by you remains reliable and protected at all point of times. Number three, within the customer centricity, is the efficient customer grievance redressal should always be one of the top priorities for all the industry participants. The next one, when it comes to the use of new age technology, it is also important that we must explore the use of effective regulation and related compliance. RegTech or regulatory technology applies innovative capabilities and techniques to help financial institutions improve their regulatory governance, reporting, compliance, and risk management. Being at the forefront in adoption of tech for banking, Indian banks should also explore multiple solutions in this regard. It is necessary that highly automated business model, next point I am touching, which relies on models for decision making, take care of requirement of fairness through additional procedure, controls and safeguards, both in the development and deployment of models and also in the final decision making. And the last, I may like to add here the need for robust governance. Good governance system and practices can bring and keep everything together and help achieve all the organization objectives. Now, while concluding, I can say that the most recent landscape of the world is characterized by intensive use of tech, which had transformed almost all aspects of life to a certain extent in a disruptive way. The success of digital transformation of the economy substantiate the fact that innovation is the key enabler for societal change and it should be treated as public good. Considering the host of the issues plaguing the digital ecosystem like digital fraud, identity theft, data privacy, governance of the digital service provider, etc., it becomes paramount that we all should strive for responsible digital innovation. As a principle, banks must embrace the digital transformation and must be cognizant of the fact that agility, customer centricity, and governance should remain central to their orientation. I like to rest here by quoting the statement of Mr. David M. Baer, CEO and co-founder of 11FS, and named among the top 100 most influential fintech leaders of 2016. Quote, technological innovations will be the heart and blood of the banking industry for many years to come. And if big banks do not make the most of it, the new players from the fintech and large technology companies surely will. Unquote. I once again congratulate the Bombay Chamber of Commerce and Industry. The events such as this are going to play a major role in development of the banking sector and shall motivate the new entrants, innovators to bring the new ideas, explore the new technology. I wish the event a grand success. Thank you.
Thank you so much, sir, for your wishes and for sharing your thoughts on the topic of digitization of the Indian banking sector, which we believe would guide our members to understand this topic deeply. We now start with our panel discussions. For all our participants who've joined us virtually, you may post your questions in the chat box and we can have this addressed. Okay. Sure. Shri Choudhary will take questions from the panelists, from the members of the audience.
So one question from my side. We are seeing a fairly huge competitiveness in payment infrastructure. And the profitability of payment companies in the current environment will always be suspicious. So how does one balance between growth, cost, and profitability in the emerging world of digitization in banking and financial services?
Thank you. Possibly I'll take all questions and then I'll try to respond together. If any other question?
Good afternoon, sir. This is Ashit Kampani. I wanted to understand the recent rollout of e-rupee which is coming out. How will this be able to bring all the stakeholders together into the banking ecosystem?
Anyone else, or should I? Okay. I'll start with the second one first. We call it as a digital rupee. It is a legal tender, legal form of the physical rupee, what you use it, duly backed by sovereign guarantee and issued by a central bank. And this is going to complement the existing currency as well as the existing payment system. It is not going to replace or not going to substitute any of these services, products, currency, what is available at this point of time. These are the pilots. You must be aware that we have started wholesale pilot in the month of November. 1st November is started with the specific use case. In the month of December, from 1st December, we started the retail CBDC pilot with the specific use case, that is a P2P and P2 merchant transactions, person to merchant transactions, and within the closed user group. At this point of time, basically, we have around 25,000 closed user group, which will be extended to 50,000 by month end. And idea is this to use multiple design choices, multiple tech features, and possibly we are trying to mimic all the attributes of the physical currency which if we can achieve through the digital rupee, etc. As you are aware, and what central bank digital currency tracker also indicate that more than 92% of central bankers, they are some way or other exploring the CBDC project, either by way of conceptualization or by way of POC or pilots, or few of them, smaller countries specifically, have issued the launch, that is 7 countries they have launched the CBDC. And for each one, each country motivation might be different. Some countries possibly physical distances and how to take the physical cash to their population. Digital currency is the one use case. In some other country, basically, people don't have any appetite for physical currency, and that's why they have gone for the digital currency. Use cases vary significantly from country to country. In our case also, we look at the multiple use cases, including we are looking at, we don't know how the things will evolve as and when it is properly launched. Again, I am repeating, it is a pilot and it will be running within the closed user group only. In future, once it is launched, as and when it is launched, we believe that market itself will find out multiple use cases, but some of them are very clear that possibly it may improve the efficiency of the cash management system. Number 2, cross-border transactions and remittances will be much more efficient by way of cost reduction and timeliness. And also settlement is instantaneous because it's the central bank money, and multiple use cases relating to wholesale transactions also can take place under this segment. The settlement risk is taken away actually by use of this. Therefore, at the same time, there is some appetite for the digital currency for the usage in the digital world. So that also possibly it will try to cater and try to meet. However, this will be there actually with all of you, and market, we believe that the way NPCI had come out, all this UPI and all, that has evolved, particularly specifically during the COVID time. We also believe that multiple use cases will be developed and evolved in coming days on this. We are also looking at multiple way of offline transactions, how it can be possible, like physical cash. We are also looking at whether some programmability can be brought with the specific request, which can take care of the diversion of funds. All those aspects we are looking at very closely in use cases. On the first aspect, on the payment side, the competitiveness, we totally agree with you, and obviously you are better aware than me that it all depends on the business model and the type of value what you bring on the table, which makes you popular. I will not go beyond that at this point of time. Any other question on this? Thank you. So thanks a lot for inviting, and wish you again all the success for this event. Thank you.
Thank you very much, sir. Thank you.
I will leave it.
We now start with our panel discussions. And as I had mentioned earlier, the participants who've joined us virtually can kindly post questions on the chat box, and we can have these addressed. Our first panel discussion for today is on ecosystem banking and neo-banking in the transformative stage. For this panel, I would like to invite to the dais our eminent moderator, Mr. Rajiv Anand, Deputy Managing Director, Axis Bank, and our panelists, Mr. Anand Behar, Partner Risk Consulting, EY India, Mr. Sajeesh Pillai, Managing Director and Head, Assets and Strategic Alliances, Consumer Banking Group, DBS India, and Mr. Arpit Rashtan, CBO and co-founder, Scienzy. Thank you so much, and over to you, sir.
Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. Having spent many decades in the financial services industry, I think the ability of the financial services industry to innovate and disrupt, to my mind, is a bit underappreciated. So let me just give you a couple of examples. Maybe Nilesh and I are a bit older than we look, but do you remember the time when there was open outcry in the Bombay Stock Exchange, and all of us used to wait for the next morning's newspaper to figure out what prices were, right? And from there we've come to the National Stock Exchange and the Bombay Stock Exchange, and the entire process is digitalized. You have computer screens in deep and remote parts of this country, and earlier the stock markets were predominated by Bombay, Gujarat, Rajkot, Surat, but now it's a truly national market, a truly international market, and now that GIFT City is coming about, it becomes truly international. I remember in 2000 when I was setting up what was then ANZ Greenlays Mutual Fund, I went down this road to a very large international bank's custody business, and they were showing off this huge vault that they had to store physical shares, and how it was waterproofed, and it was truly like a vault, and how people were sitting there signing those forms. In 6 months' time, that property became, I don't know what they did with it, probably converted it into a fish tank, but it became irrelevant as DMAT came about. We take these things for granted, but that is the kind of disruption that we have seen in banking itself. The big disruption in the 90s used to be ATMs, and we all thought that ATMs is equal to the death of banking. But I'm sure you saw HDFC Bank in the last quarter results announced that they opened 687 branches in the last quarter and will continue to do so. What we've actually seen is that ATMs have thrived and survived, but branches and tellers have also at the same time increased. Similarly, you've seen the evolution of internet banking, mobile banking, and now the big game in town, UPI. And so therefore, if you look back over a 25-30 year period, while the general narrative is that banking and financial services are boring guys, fintechs will have them for lunch, etc., I think we've done a pretty good job. You would agree, meeting customer expectations, adopting changing technologies to be able to serve our customers to the best of our abilities across financial services, and I'm sure we will continue to do that as we go forward. But it is a changing world. Like I said, customer expectations are changing, technology is changing. Some of us have legacy assets. There's a large ecosystem that is getting built around banking and financial services. Neo banks are coming up, as has been said by Bill Gates. We need banking, not banks, is probably to some degree playing out, because most neo banks don't need a license but are able to do pretty much everything that a bank can do. And so therefore, in that context, as we think about ecosystems, partnerships, and neo banks, we have an illustrious panel here to talk us through all that. Anand Mihir, is a partner with ENY, and ENY, I'm sure all of you have read Sudhir Kapadia's note from Davos. I hope if you haven't, please do so. Anand Mir is a partner with ENY in the consulting practice, focusing on risk business within the financial services segment. He has over 22 years of experience in financial services, with expertise extending to areas of business management, operations, risk transformation, and has deep banking domain expertise through experience of running sales, credit, operations for consumer banks, and risk and regulatory functions. We also have Sadish Pillai. Sadish is the Managing Director, Head of Assets and Strategic Alliances for DBS Bank. He has over 2 decades of banking experience working in various consumer banking roles for some of the world's largest banks. Sadish has been in P&L management roles, responsible for revenue drivers worth $250 million. Before joining DBS, he was with Citi and Stan Chart. We also have Arpit. Arpit Ratan is the CBO and co-founder of SignZ. He has a decade of experience in multiple companies and organizations, revolutionizing the industry and its legal ecosystems. His expertise in fintech, corporate law, and ITES has driven excellent results in all categories he has spearheaded. He's been one of the forces behind SignZ's success, winning numerous awards from RBI, Monetary Authority of Singapore, IBM, Thomson Reuters, and Forbes 30 under 30. So welcome, gentlemen. Can I request each one of you to do a quick round of 3 to 5 minutes on your thoughts, and then we'll take it forward from there. Anand, if I can request you.
Thanks, Rajiv. I think starting off with the example which you gave, that you were waiting for the newspaper to tell you what to do, to coming to an age where if you're reading in the newspaper, it's already too late. I think that's a journey we have traversed in last 20 years. We all heard Prime Minister Modi talking about India at 132 trillion economy. Best part of that being the per capita income going to about $20,000, a 10-fold increase. I think never been a better time for us in the country to really embark on some of the journey which we have been kind of seeing happening more in the West. We clearly see India being in the forefront of the whole transformation journey. If you look at the sector per se, the fintechs, the neobank, in spite of the so-called funding winter which happened in 2022 first half, this is a sector which continue to get capital, continue to see international player coming in the country, likes of Tide and Revolut and all, which is a very healthy sign. So there are a lot of headwinds, a lot of tailwinds I would first start with in terms of the market opportunity which we see, in terms of the talent. Next 25 years is purely the war of talent. Geographies and countries who have got the right talent will take the lead, and we are in the forefront of that. Large numbers, we look at our MSME population, 63 million, we look at unbanked, unserved population. All that kind of opens a kind of a avenue for organizations to really build kind of rails to get into those segments. But more so importantly, I also see that in spite of the geopolitical challenges which we saw last year, the neobanks globally are also, well, some of them have been very successful, but there's always a path to profitability which they are still searching for. And we are in a situation where payments being the largest space where they kind of get customers, but the revenue stream from payments, as Mr. Shah highlighted, is muted in India. So how do we really get onto the balance sheet side? How do we really get onto the lending side will be a kind of a key area for lookout. And very rightly put by you, Rajiv, I think there was a time when people were saying banks will be dead and will be taken over by bots, but that coexistence has come out very clearly in open. I think both sides need each other. And banking as a service, if you look at even global, the payment service directives which have come, which are opening up the open banking, I think those are all areas which are giving us a very promising path that how the both sectors will coexist. And as a consumer, I feel that we are so used to the Swiggies and Zomatos of the world, we now expect same kind of convenience to come through banking. And it's not easy. It cannot be because we are in a regulated space. As I say that the Uber moment would have taken longer if Uber was a regulated entity. So it will happen. It's taking its time, and I believe the regulatory stance is also it kind of from an India perspective. I see that we are looking at the maturity of the market before kind of just opening up digital banks full stack. Even likes of the MAS and HKMAs and all, they have not kind of brought these digital banks absolutely at par with the traditional brick and mortar banks. So there are differences which, as the market kind of matures, they are trying to bring it up. But aspects which have been highlighted in the Niti Aayog paper last year, I think it kind of very clearly puts the metrics which needs to be met and how do we kind of open up the sector. So all in all, I would say, Raju, I think this is the most exciting time we see from a transformation and last mile delivery which could happen in banking.
Hi everyone. I think I'm the only odd one out in some ways on this panel, and I think I have that difficult job of convincing everyone on fintech along with the finance. But I will take away something from what was said, Rajiv, that traditionally, if you look at banks, the largest banks were the ones which had the biggest vaults, and somewhere that is still, that legacy of vaults still continues to be with some banks because they were said to be the custodians of these cash. But banks were not building those steel vaults. So the largest suppliers to banks during US at that time were actually companies who were building these steel vaults. And today, I think that steel vault has been replaced by technology. So today, the biggest steel vault or the biggest or the company or the bank which is able to perform the best on technology will eventually going to win. And I think that is where banks don't need to build the entire technology themselves. There are companies who do this for bread and butter and who will be better at doing this. And I think that presents a great opportunity for the bank and the fintechs to collaborate. And this is, of course, we've seen this cycle from 2015. There was this huge debate on bank versus fintech, who will win, bank versus tech in general. I think debate is not so much about who's better at banking, but the debate is that who is able to get the consumer mind space. And if you look at even today, the amount of recalls that a Uber will have, or a Zomato will have, or a Twitter will have, is far more than your bank which you're using, which is servicing, let's say, all these payments. So I think the real debate is one, who is holding that consumer throughout the day or throughout the week or throughout the month. And therefore, always the debate was that whatever is happening within the bank, can it happen on the platform which is holding the consumer? And I think that debate was till I think RBI came out very specifically in the last 1 year was, I think, very well balanced. But I think RBI in India has at least made it very clear that for certain products, they want bank to have a direct relationship with the customer. And therefore, a large part of business model which was existing is no longer existing. And I think we will all wait for more clarity. But I do feel that this fight for the consumer mind space will continue. Consumer tech or companies which are better at customer experience and do have services which are just beyond only banking will still continue to take this mind space. And it will open up an opportunity for those companies to additionally provide financial services. And I don't know how the regulator will eventually, how will all regulation eventually pan out, or how will these companies mature at better managing their regulations. But one, I think the clear division is that banks are better at banking, 100%. I think there is and there was no debate at it. And consumer tech companies are better at providing that user experience and capturing that consumer mind space.
Hello. So coming from DBS, can you hear me? Coming from DBS, which has invested very heavily in digital banking, digital infrastructure, I can vouch for the fact that ecosystem banking, where we partner with lots of players, large platform players, fintech like yours, we embrace you. It's here to stay. See, we have been in the banking industry for about 55 years. We operate in about 19 markets, of which in 6 markets, we have very large retail operations. And these are very diverse markets like India, Indonesia, China, Taiwan, Singapore, Hong Kong. And all these markets, if you see, the consumer profiles are very different. The banking penetration is very different. The customer expectations are different. The needs are almost similar. But what we have seen is that the ecosystem strategy, the strategy or the approach towards working with partners has worked well in all of them. So our playbook, banking playbook on working with ecosystem partners is very, very clear, which talks about what kind of partners do we work with, what is the kind of things that we look at when we partner with large players or small players or fintechs. And there are 3 things that we look at. One is, does the partner bring to us enough number of target customers who we can acquire at scale? So if you look at it, if you wake up in the morning, you hardly will open your bank app and get engaged with that. But you might open your WhatsApp, you might open your Instagram. So there are lots of platforms where our target customers are much more engaged than they are with the banking app. So these players have the potential to bring to us the target segment at a very, very low cost of acquisition. So that's number 1. Number 2, some of these players know the customers very, very well because the customers are much more engaged with those platforms. So the data that these platforms provide to us can help us to understand the customer well, cater and tailor the product in such a way that it is very intuitively given to the customer in a very hyper-personalized way. So that's the criteria number 2. And number 3, there should be some type of a digital DNA for us to embed our product in the customer life journey. Like I said, customer does not wake up and say, hey, I want to go to the bank. Banking is essentially helping the customer to reach out the final need. So if you are able to use the moments of truth on the platform of a partner and embed our product in that makes a winning partnership. So those are the things that we look at. And the way we approach these partnerships, there are three ways. One is we participate. So if there's an existing platform where we see we have a large number of target customers already engaged, we partner and we participate there. Second, we orchestrate marketplaces. So in some of the markets, we have created property marketplaces where people come in. We have an API platform where startups can come and integrate with us. And there is a partnership to create products which are catered to individual customers. Third, we co-create platforms with startups like yours so that we can serve the customer completely intuitively. So that's the approach that we take, and it has worked very, very well. And I feel this is the way forward for banking in the future.
Thanks. A question to you is, as you think about, for example, your primary market, Singapore, what has been the experience there? And given the fact that you've seen both markets, Singapore and India, obviously India is a lot more complex in that sense. But can you just talk us through how partnerships have worked in Singapore and in India, and is it easier there, easier here? Some understanding for all of us.
So see, we have ways of working with smaller players who are not yet established, and we have ways of working with large established players who have huge number of customers that we want to target. In India, we have live partnership with 4 or 5 large players. Some are regulated, some are not regulated, and it is working very, very well for us to scale. See, in Singapore, compared to in India, we have close to 90% penetration. So 9 out of 10 customers in Singapore hold a DBS account. There we are the lead player in creating marketplaces where the customers can come and get served. In India, being a late entrant, we started with Digibank in 2016. Our approach has been a little different. We approach the partners. There is a digital exchange program, startup exchange program, where startup like yours can come work with us, collaborate. There will be a team hand-holding you to be able to create solutions for our customers. The experience, Rajiv, has been phenomenal. The way we have been structured from the CEO level, there is a separate focus given to ecosystem strategy and P&L around ecosystem. And it talks about which are the partners we need to target, which are the partners we need to work towards acquiring customers, which are the partners we need to work towards engaging them on existing products. And there are targets given to ensure that the customer satisfaction score on that platform is met at a high level. So it has worked very, very well. And I think going forward, you would see much more partnerships in India. We have about 4 or 5 of them. I can't disclose them, but it's there on the website, which is working very, very well for us.
So Access, for example, is very similar. We work with multiple partners on the retail side, multiple partners on the wholesale side. We have a very large partnership. I mean, ultimately, many of the UPI apps work off the rails that have been provided by banks like Axis. So much of that UPI transactions really go through the 4 or 5 large banks in India. Similarly, we have large tie-ups with Flipkart, where we have a co-branded card. Similarly, Airtel. And what it does for us is 2 things. One is, in a sense, working with many of these large entities validates, improves our own technology capabilities to be able to work with some of the big techs. 2 is, like you rightly said, it opens up new avenues from a customer perspective. We also work with the likes of ScienceZ to be able to create a differentiated customer experience. And so therefore, there will be places where we will compete with fintechs, but there will be places where we will collaborate with fintechs. And I think that space is beginning to evolve quite nicely. But one of the things that I want to know from Arpit, I know that both DBS and us are customers of yours, but without any fear and favor, how has your experience been working with large bank partnerships? I mean, do you find them
better with DBS?
Boringly bureaucratic? Arey boss, 3 mahina lagta hai ek meeting ke liye, and you ask for some technology changes which you guys get done in 30 minutes. It takes us 3 months. Give us some honest truth. Don't worry, I won't tell anybody in the bank.
No, so I think I had a very different view when we were a 30 people company, and now that we are a 300 people company, I have a very different view. I mean, rightly, I mean, when we were a 30 people company, we kind of felt that this is just too slow, right? I mean, something that a decision where I would call up 3 people and it's done in 5 minutes would take like 5 weeks in a bank. But now that we are a 300 people company, we're still not to reach that point. So that 5 minutes now takes 5 hours. So I can imagine why that is needed. But I think there's a clear difference that we have seen. One of the things that we have seen working with a bank is that there's great depth of domain expertise available. So not only have we added value to the bank, but we have also seen that there's a lot of value add we have got while we have been building this product. And I think that is the reason we fundamentally feel that our early adopters were actually bank and not fintechs. And that is actually very different from if you look at startups which are working, their early adopters are usually fintechs and then are later banks. For us, it was actually the opposite. And therefore, I think the way we built it out was a lot of value add which is coming back to us from the banks. It was slow, definitely, that is without to say. But I always believed this, and this is not I'm saying because I'm this panel or we are in 2023, but even 2016, our vision was very simple, that if you let enough time play out, it will eventually be the most digitized bank that will win. It cannot be the fintech. And there were reasons for it. One was that there was not enough capital to invest. While you may get a VC funding and you may run with it for a year or 2, but the amount of capital that a bank had, or the budgets the kind of bank had to just make experiments and let them fail, that was not available, which is very, very important for any innovation. They did not have enough time on their hand to actually innovate. Innovation requires you to fail multiple times. It's not about getting success. Most of the fintechs which are running with VC money, and because we were working with both, we realized they had to succeed in a year, come what may. If they did not succeed, the program got shut down. No one talked about it. So the banks had more time, more capital for innovating. So in a longish time, in long period, it will be the most digitized bank that will eventually win the race. And if you look at 2023, it is, while there is still debate, but if you've seen a lot of fintech products which existed between 2016 to 2020 do not exist today. Either because of regulatory or they were too risky and operationally there was so much losses. Eventually a lot of fintech products went out. So if you look at fintechs today, they are also either buying a bank, like BharatPay went and actually took a bank license to make sure, or you have fintechs which are now setting up large operational team. From Science's perspective, we do still feel that banks can definitely improve a lot on the decision making. I think that is the number one factor which is holding large banks back, that it is very, very time taking to take decisions. But apart from that, I think most of the things have now been put in place. There's a cloud strategy. There's a strategy clearly to move things to digitization, which was not there in 2016. I remember that I had a meet. I won't name the bank but I had a meeting with the compliance head, and this was pre-RBI pushing everyone. So 2016-17, because I was trying to prove that you don't need a hand signature on every page, and it is so obvious today. No one does that anymore. But in 2016-17, I was trying to explain to them that if you can get an e-sign, it practically means that the whole document is signed. And it was just a very hard conversation that did not go through. So I think that, of course, this has changed, but I'm sure a lot of decisions like this are still getting stuck in a large bank, which can be unlocked as we move ahead.
So Arpit, to solve exactly this problem, we have structured ourselves in such a way that all the alliances, whether they are large alliances or small ones like with fintechs or startups like yours, are managed by teams which are completely different. And we start with a POC. We start in a sandbox environment so that decisions are not for the long term, right? Once things work, start showing green shoots, then we make the decisions of full-time investment. In fact, we also have active teams looking for investing in fintechs and startups, which are promising. So that really helps. So maybe we can discuss post this on how we can collaborate even further.
So Anand, the question I have for you is, while fintechs have not been able to create a successful bank, they have certainly chipped away at various, sort of revenue or profit pools. Payments, probably remittances as we go forward, as UPI becomes now more and more global. I think the revenues that banks make out of remittances, for example, is going to be, under threat. Similarly, we are beginning to see, some activity on, for example, on mutual fund distribution, etc. What do you think, banks and financial services companies should be, sort of worried about as we go forward? Is there any space that you think that is very juicy, for fintechs to chip away at, which banks are being a bit complacent about today? The one good thing which I was just discussing with Nilesh is this model of spending 2 rupees to bring in 1 rupee of revenue, I think is well and truly dead. And so therefore, to that extent, for fintechs to be able to do that, to build business models, is probably is not a threat. It has to be, truly transformative from a customer experience perspective. Are there any ideas around this?
So if you look at the fintech space, maximum kind of action you see on the payment side, followed by lending and insurance and wealth tech. I feel that we look at the conventional banking products for a long time. The saving product remain a kind of a vanilla saving product, and some of the innovation which has been done by the fintechs on the saving product side. Giving an example for one of the fintechs. Every time you use your virtual debit card, whatever is your rounded off amount kind of goes into your saving pool. It's a very simplistic product, and in a way it has existed in Indian market in the microfinance sector, and there in an informal market, these kind of products were there. But in a formalized banking sector, we did not see this kind of innovation happening. So for a long time, I think this which remained kind of unattended to, we have seen. So for a long time, we have seen this being unattended to, where fintechs have kind of captured space. I also feel that embedded finance or ecosystem, as we were talking about, which is about, very simply put, we feel that 1 + 1 should be more than 2 here. If the combined value generated from the ecosystem should be more than what every individual participant to the ecosystem brings in. That's a space where banks have not kind of got in fully. Embedded finance is being talked about, but how much have we embedded financial product on non-financial platforms? That is a space where I think there is a lot of juice, not only on a retail side, but also if we go on to the MSME side. The value-added services, which is one of the forefront of the neobanks in MSME space. Simply put, that I'll give another example, like expense management. What as a product exists in the market for an MSME is an expense management tool, but fintech kind of comes in here and make it an expense optimization tool, which then kind of help them in forecasting their kind of cash flow, they help them in how they should kind of reach out to their kind of participant in the value chain, which is very different from what was existing there. So these value-added services, again, I feel that there is a lot of juice which is there, which could be tapped in. But the biggest threat for fintech is that when the big players like SBI and Kotak, they've created a bank within a bank and have approached it. That success is hard to replicate, because obviously with the might and the scale what they have, Kotak 811 for March quarter did, for every 10 accounts of HDFC, they had 4 accounts opened in 811. Now, in a short time, they have achieved that kind of a scale. Now, that's where I feel the fintechs have to kind of worry about that, or find ways and means of working together, because platforms like those will also need the fintech ecosystem to come and support them. So that's how we'll have to find those avenues where there will be a win-win situation.
Very true. Sajesh, I think one of the things that we've been talking about is ecosystem banking, wherein we've looked at ecosystems created by banks and financial services, etc. Banks, on a bank app, you can buy mutual funds and insurance and is equal to ecosystem. But I think there are larger ecosystems that are getting built out as well. I mean, Jio is a great example. And as they now get into financial services as well, they could potentially create an app where you can buy movies, you can buy groceries, you can buy clothes, and you can get, finance as well. Brings us to a truly super app kind of environment. The only super app which has really worked globally has been WeChat, and nobody has been able to replicate that kind of success anywhere in the world. In DBS or you, how are you thinking about the larger ecosystem plays?
So if you look at, again, depending on the maturity of of our strategy in the country that we operate in, if you look at Singapore, we have an app called Payla, which has everything that a customer would want to use on a daily life. It's a good example of various partners and ecosystems coming together and creating a super ecosystem. The aim is to be able to present to the customer a platform, an app which is super easy, super intuitive, and provides with everything that the customer needs on a daily basis. But if you look at a place like India, we have a digibanking app, which essentially we started in 2016 as a mobile-only bank, which a person could take anywhere he is going. We were one of the first banks to come out with that. The engagement of the customer in that, from an acquisition point of view and servicing point of view, has been high. Now, for us to be able to use just that to integrate everything, maybe we are a little too late to the party, given the penetration that we have today. But to take your example, if let's say tomorrow Jio, with all the information they have, come and build something where the customer can be served, I'm a true believer that when you look at a customer and you look at making a decision about the customer to serve him to make, let's say, credit decision, not just the traditional information that we get from the banks and the bureau, but also the non-traditional information that you get from the telcos, the e-commerce company, the ride-share company makes a huge amount of difference. To the banking population, not much. To the banked population, not much. But to the underserved population, huge amount. So I think a player like Jio, which can amalgamate information from all these non-traditional sources, has a huge potential to be able to serve the needs of the customer. And that can play out in India because you have all this information available in one player like Jio.
Super app is an interesting concept, and while we are still seeing the emergence of super app in India, I think the customer experience and the ease of those platforms will be very crucial in them being successful. Very simply put, if we take out our smartphones, and if I tap it twice, I reach to a grocery app. I tap it twice, I reach to maybe a bank app. But within the super apps, if I'm not building that kind of an ease that it should be less than 2 taps, how do I integrate that experience? That will change a lot of the adoption of super apps. I still feel that we are in the early days of seeing success of super apps here. But overall, from an ecosystem perspective, we also see the amount of investment which will be required for some of these super apps, or even let's say to replicate a WeChat kind of a model in India, will be humongous because those space have been kind of taken by some of the large players, and that's what I feel probably WhatsApp Pay would be facing in India. That how do you acquire the new customers? How do you make them shift? Surprisingly, I feel while we are a very price-conscious market, people shift from Swiggy to Zomato for 30 rupees discount. On the payment side, I think the stickiness is higher, and to the extent that consumers are moving away from taking out the plastic, punching the pin. You can just do a GPay, which you feel it's a debit. You hit your account right away, but the convenience is taking precedence over that. So that is the kind of I think the space which we have to look out for when we talk about something like super app.
So I think one is we'll have to draw boundaries to a super app. It can, like in India, I don't think it can be everything. I think that play, as everyone is rightly putting, was there for some time, and I think WeChat, Alipay were right in the middle of it when everything was getting built, and they were able to at the same time capture a lot of spaces together. I think unfortunately in markets where this did not happen, it includes India, US, a lot of other markets, where different apps capture different mind spaces. A concept of super app is very, very hard to emerge at this point because a lot of those plays have been made. But what may happen in India is that if you look at PhonePe today, it has been able to, at least within the financial ecosystem, capture a lot of the financial need that a consumer has. Cred, to a large extent, was trying to create a super app for a very limited set of people within the market. So what I think now Indian consumer, fintech, whatever we want to call them, they're drawing boundaries and they're saying that within this sector, I'll do everything with the consumer. If you look at Park Plus, I don't know how many are users. They're saying if for a car owner, I would do everything, right? Whether it's financing car, insuring the car, getting the car to wash, parking the car, getting it inside your society, etc. So if you see what will emerge is super apps within people who have a vision saying that within this ecosystem of the customer, I want to be everything for that consumer. So at least you will have one brand when you think of about your car, or you'll one brand if you think of anything to be delivered to your home, right? Whether it's Zomato, grocery, and Zomato would try to do everything under the sun when it comes to being delivered to your home. So maybe not a super app like WeChat, Alipay will do everything under the, from grocery to payments to chatting. But yes, you will have these smaller or nuanced version of super apps which will still have a play in India, and you can clearly see a lot of them which are actually making a very, very good play.
We didn't speak about Bharat banking. Any comments on how digital banking is going to play out as we look to serve customers within Bharat as opposed to Bombay?
So when you say Bharat, you're talking about the underserved, rural.
Not necessarily the underserved, but customers within tier 5, 6, 7, 8, 9 towns.
So I think for a for-profit organization to be able to serve clients residing in tier 3, tier 4, tier 5, the cost of service and cost of acquisition need to be low. I think digital channels have the capacity to do that. But I have a caveat there, right? Digital penetration is not the same as digital savviness. And if you combine with that financial illiteracy, it can be really dangerous. Even today, literate people get phishing. I mean, they are phishing attacks, and they are susceptible to that. Right? I still have customers complaining, "Hey, I did not share the OTP," and OTP. I mean, there are so many information that is given to the customer about not sharing OTPs, but it still happens. This happens through the people who are already literate and so-called digitally savvy. So there is a risk for us to not, if we don't manage that very well, though it may be cheap, it may lead to people not trusting the channel and not trusting the banking sector. And that's something we need to keep in mind. Otherwise, digital is the only way to go and serve those customers once they become financially literate and digitally savvy.
No, I agree. Anand?
I agree to what Sajesh was saying, but interestingly, I also see that in India, the tech literacy is far better than financial literacy, and while the smartphone numbers even in the rural the penetration is decent, I would say. An insight which we saw from microfinance coming in, that in the center meetings, the woman would always carry a feature phone or would carry no phone. But at a household level, they had a smartphone. The son would have a smartphone on which probably is making TikTok videos or something. So I think when we are looking at a digital banking penetration in these markets, we'll have to also look at the household level and how we can kind of create penetration in there. Some of the products which are more at family level, where you kind of involve more members of the family. Generally, the new generation is more tech savvy along with financially savvy. How do we kind of bring them? I think that could be one of the areas. Smartphone feature penetration through USSD platforms, feature phone using USSD platform is another area which could be used. We've also seen, we all have seen the possibility of what ChatGPT could do, and how do we kind of, for the last mile who are involved in an assisted manner, how do we use them from a conversational AI perspective in vernacular language with the last mile? I think that we see as an opportunity of ensuring those kind of mis-sales and all do not happen. So is it solved right now? Is it easy? Is the cost of acquisition low? Probably no is the answer. But we see that even aspects like DBU and all, which is being set up by banks, they will go towards some of these far-flung areas, and which should help on digital adoption.
So what we are finding is that ultimately one has to think about the liability side and the asset side separately. Meaning that on the liability side, it's really about brand distribution, trust. And so therefore, if you want me to open an account with you or keep deposits with you, I need to trust you. And just having a mobile app for you to do that is not possible. And so therefore, some sort of a physical presence is important. He or she may never come to the branch, but having some sort of a physical presence, I think, is critical. Which is one of the reasons why in India banks continue to open branches, albeit the size of the branches has reduced quite dramatically over the years. But getting that physical presence is critical from a liability side perspective. However, the story is quite different on the asset side. And as Sajesh mentioned, nobody wakes up in the morning saying, Axis Bank app mein kya ho raha hai. Ultimately, the customer is buying a house, not a home loan. And so therefore, on the asset side, the customer is looking for really convenience, simplicity, transparency. And so therefore, the digital app plays a much more significant role on the asset side as compared to the liability side. And ultimately, the savings account is just a transaction account, and therefore, have you made it simple for the customer to be able to transact, to be able to transfer money P2P, P2M, make EMI payments, buy mutual funds, and so on and so forth, determines whether the customer will open an app with open a bank account with you or not. And I think we are seeing that is increasingly becoming the case even in semi-urban and rural areas. So, for us, I mean, I'm often asked the question by investors, particularly of, will you continue to open branches or will you invest in digital? My answer to them is it's not an either-or question as far as we're concerned. We will do both. Now, whether we open 100 branches or 500 branches, that's a separate strategic decision. But fundamentally, I think bankers in India will continue to open branches, but at the same time, will continue to invest to be able to deliver a differentiated customer experience as we go forward. I think it's a good time to open this up to the audience as well. Happy to take questions, which this eminent panel is happy to answer.
Hi, this is Chetan Agarwal here. So my question is, when we are talking about digitization, the banking and overall financial services sector, the threat which Sajesh mentioned about the phishing. So how that is being addressed? I mean, is there any way we are going whole hog on the digitization, and how do we protect the customer? Is there any thought process behind that?
So I think from a data perspective, if we see the kind of guidelines and the kind of platforms which have been kind of brought in past 3 to 5 years, this absolutely at par with what the global standards are. From a customer perspective, while we were always thinking that in India data privacy is a myth, is not a challenge. That's not the case. I think consumer today is happy to share the data, but they need to know what the outcome they are going to achieve from that, right? So there has to be a benefit for sharing the data. And the whole consent-driven mechanism, which we are with the advent of the account aggregator concepts and all which are coming in, I think the ownership of data is now with the consumer, and they allow for be the participants or the users on that platform to use the data to their advantage. So this said, if you ask me for the sector, this will be one area which everyone will be on kind of on a lookout. The threat which comes from data breaches and privacy-related standards. But there is a lot of investment has gone in bringing that resiliency. I will also say that COVID kind of was a great enabler in the sense that all of a sudden everyone is working from home. Offices where you have to make 4 entries to kind of get in and then work in their environment. Now those jobs are being done from home. I think that was a time when a lot of these kind of infrastructure enhancements were kind of brought in, and today working through VDI in a virtual environment where the data is secure is now is a norm. So we've been benefited by that a lot with the kind of investment which had gone in. Can we be at ease that now we all taken care of? No is the answer, because with all these technology also comes the kind of breaches and the folks who are trying to breach it all the times. But it's a war which will be always there. I don't think so we can hang our boots. In fact, interestingly, there is a session towards the end of today's program which focuses on cyber threat and security assessments.
There's no silver bullet here, right? 2 things which I'll say. One is customer awareness and education. We need to continuously do that. Second is, see, cybercrime and cyber criminals are always 1 step ahead of the technology. So players like us have the responsibility to upgrade our technology and safeguard against all this. So those are the 2 things. There's no silver bullet.
I had a question on what Rajiv said at the end, that a person comes to a bank to take a home loan or a car loan. but when loan is dispersed, probably that relationship doesn't go on further by just recovering the money. Is it possible for a bank to become the custodian of the documents of the asset which they are owning and then service them, which will become much, much easier? For example, you said about dematerialization when open outcry system went off and we have now shares in demat. Now, there could be a possibility that a bank become a custodian for various assets which an individual holds and then helps them in that direction. That was a directional question to you. If you think if there is an answer, it's fine. Otherwise, we can offline discuss.
It's an interesting idea. I think what typically happens is, for example, on a home loan or a car loan, 60-70% of transactions have bank finance on that. And inevitably, if bank finance is happening, then the financer will want the physical documents. Now, you could potentially come to a stage where most of these documents, get dematerialized. Some states have already started working on dematerialization of documents. We're already seeing that on Bahan, etc., on auto loans. It may not necessarily be with banks, but this whole concept of the fact that physical documents are moving from buyer to seller, etc., may go away, and where you could potentially be, because there's a central repository of these documents, transference is happening, like we do on shares, could potentially happen at some point in time. Many of these issues are also state subjects, so therefore, adoption at a national level is also a big issue, brings complexity on an interstate basis as well. So some of those issues is something that we have to work through.
Here, good evening. Now, part of the question has been already answered by Mr. Rajiv. So it's like, the physical banking will still continue, that is what you're saying. But is there a calculated trend which you have decided, like instead of buying Arpit's company, Mr. Pillai is buying Lakshmi Vilas, for example. So it's a costly decision, maybe he's getting it at discounted price, whatever, the real estate. So what is a trend? I mean, which is like in 30s, before 30s, theater was the only entertainment zone. Now after 30s, you have TVs and movie theaters, everything is available on the screen. So there is no physical, touch between the artist and the observer. So what is the trend? What you are saying? It will still continue forever, like the statement of yours, like physical in India will have to remain, but till when? And what is, or maybe Arpit can, in the mirror image question is, whether Arpit can give that feel of being, present. The banker is just sitting next door, next to your next chair, and he is taking your queries personally. Can that be embedded?
Maybe Arpit will buy a bank. I mean, maybe he'll buy one of us.
No, and that is a sub question. You can declare your pre-IPO price before you do.
So, a very difficult question. I don't see banks shutting down branches anytime soon in India. What has happened already is that, yes, the size of branches, etc., has come down quite dramatically. In the old days, we used to have these Alishan branches, which used to be, ultimately they were also a marketing for the brand at that point in time. No longer. It is a point of transaction. Typically, 800,000 square feet, 4 to 6 people in those branches. So they serve a particular catchment, and that's what branches serve at this point in time. And what we find is that customers still continue to come to the branches. It's not as if maybe many of us have not gone to a bank branch, and therefore V is equal to n is equal to 1 typically is is extrapolated, but that's not the case. It's not, most branches still continue to see fairly strong footfall, not just in Axis, but most of the other, banks as well. For various reasons, typically small businesses, older people, for more complex transactions, home loans, they want to come to the branch. I don't think that changes anytime soon. I mean, if you go to the US, also, for example, the so-called more, sort of sophisticated, market for, or if you see, which is 100% banked, or if you see Australia, which is also 100% banked, branches continue to exist. Maybe the form factors have changed. Maybe they've become more digital. Maybe they've become more self-service. Maybe they've become more assisted. But nobody's closing branches yet. Will this happen tomorrow? I don't think so. Will this happen 5 years from now? Yes, it's possible.
I mean, in fact, interestingly, if you look at, forget banks, if you look at Amazon, which is pretty much an internet company, started as an internet company, is actually now aggressively opening physical stores in the US. They bought Whole Foods, which is completely a physical store. If you look at e-commerce in India, for the longest time, e-commerce did not succeed in India till the point they started cash on delivery. That is why Flipkart became who they are, because they were the first pioneers of starting cash on delivery. And so basically, Indian consumers said that forget internet, I will not trust it. When you give me that good in my hand at my house, I'll pay you that cash. And that's how e-commerce became whatever it is today, right? So while I think digital solves a lot of problems, but I think when it comes to trust, which is fundamental to banking, I think that is one problem which till today at least digital hasn't figured out.
Just to continue with that, if you look closer, Mama Earth, the model per se has physical outlets. And if you look at the product penetration or the customer value realized in a physical setup is higher than the digital purchases. So you keep going on Amazon and you don't buy anything and come out. But in a physical shop, for whatever behavioral reasons, but you end up buying or you're buying more. So that's going to continue. But what we also see is that to your virtual kind of a branch, that day is not far. We will have some branches in metaverse for sure. It will be up to the consumer whether you want to go in a branch and probably deal with Arpit's avatar in that branch. But that's something which is going to happen. Will it pick up big in banking? We're not sure, but definitely in some of the consumer space, that's going to eat up share.
Yeah. In fact, interestingly, I actually 100% agree. So we had filed a US patent and we have been granted a US patent for banking in metaverse. And why we have done that is I don't think current consumer is going to do that at all. But if you look at the next generation consumers, like I see my nephews, nieces, they spend 4 to 5 hours in a metaverse, right? Whether you call that a game zone, whether you call it any kind of virtual reality, but they're spending a lot of time. So if you look at the way they are trusting and building relationships, it is over internet in a digital world. So we do believe this is not going to happen anytime soon, but whenever you'll see this generation, which then starts becoming the affluent class who you want to target as a bank, then possibly a metaverse will be a very good channel because they will trust. That's how they're growing up. They're growing up trusting through a complete augmented virtual reality. So we filed a patent 2-3 years ago and we've now got that from US, but we have not seen any takers today. But we filed it because we know 10 years down the line, when this generation or the generation which is now growing up becomes affluence, that will be one of a very good way to capture trust of that user.
If you look out of the window, especially nowadays in Bombay, I think our focus should be on saving the real world. We'll worry about the metaverse, later. But thank you. Gentlemen, for a wonderful session. Round of applause for our audience. Sorry.
Yeah, just continuing on the same trend, with the UPI's strong penetration across even the small mom and pop shops, and the amount of cash which is now getting handled by the banks significantly lower, with
with the, at least the small mom and pop shops don't collect cash and come and hand it over to the bank in a big way like it used to be earlier.
They still do. If you look at currency in circulation, is actually at record levels at this point in time.
Okay.
So there is, yes, digital transactions have gone up, but the amount of cash in the system has not gone down at this stage. So we continue to be a cash society. So the way we look at it is ultimately it's not about whether bank A or bank B or phone pay or Google Pay is winning. Ultimately for us cash is the enemy, and that still continues to be a huge problem for us.
The continuation of this question is with the digital rupee introduction. If at all the UPI plus digital rupee plus the amount of transactions which happen virtually now, is the requirement for banking branches to do exclusive work, which is not done by the internet banking or digital banking. Will that be the banking of the future? That is, the branches, will it only do what is not done, say like ATMs today, if they dispense cash, the banks don't have to dispense cash in a big way. So is there a possibility tomorrow that only the ones which are not catered to by the virtual one will be done by the branches?
No.
Or do you think these things will not remain mutually exclusive and this will actually
live together?
So
for example, on our mobile app we can do over 250 types of transactions, but still customer wants to come to the branch. So the customer, think of this as a channel. Internet banking, mobile banking, ATM, branches, all four coexist today, and we get customers into each of these channels at various points in time. So they coexist despite the fact that on each of these channels, by and large, you can do pretty much everything. And I think that will continue as we go forward. Thank you, ladies and gentlemen.
Thank you so much. Thank you, Mr. Rajiv Anand, Mr. Anand Mihir, Mr. Sajish Pillai, and Mr. Arpit Ratan for this highly informative discussion on moving from physical banks and vaults to a digital ecosystem. Thank you. I now request our Director General, Mr. Sandeep Khosla, to present mementos to our panelists and our moderator as a token of our appreciation. Mr. Anand Mihir. Mr. Arpit Ratan.
Thank you.
Mr. Sajish Pillai. And Mr. Rajiv Anand, please. Thank you so much. Thank you. We now break for tea. Request you to kindly join us in the room adjacent, and it'll be 10 minutes before our next session. Thank you so much.
My name is Pratik. I run financial services consulting practice for EY. Very interesting last session, and while I quite agree with everything that was being discussed and the various outcomes, but being a consultant, I thought it would be good to put some challenge and hypothesis back to the conversation. So I'm just going to redo my presentation a bit differently. So I have a 21-year-old son. He graduates this May from Berkeley. And I'm just going to look at two worlds in which some of us grew and the worlds in which our kids are growing. Okay? So when we were growing, I remember waking up 5 a.m. in the morning or 4 a.m. in the morning, old passport office, standing 12 hours to take a passport. When we were growing, I remember standing a couple of hours to stand for the train tickets and the movie tickets. When we were growing, I was told by my parents, it's either science, arts or commerce. And if you take commerce, it's CA. If you take science, it is IIT or become a doctor. Life was very simple. When we were growing, 3 dresses during Diwali and lasts you for the rest of the year. When we were growing, my parent never used to come to my school, college. They didn't even know where I was studying. They knew something, and CA automatically happened. That was the world in which we were growing. Now the world in which our kids are growing. Lot of gratification. We celebrate graduation in first standard. We celebrate graduation from primary school. We celebrate everything. We do like 10 times due diligence, who's their tuition teacher, which classes are they going. Our kids have access to Bumble, Tinder, Amazon. The Alexa in the house is asking to order directly from Amazon. And they expect that. It's part of their life, right? So that's the world in which our kids are growing. Now, all of a sudden, as bankers, we need to understand because ultimately we are doing business and servicing a customer. And the customer is all of a sudden the center of everything that we do. And if you look at the stats, 52% of India's population, or if you take 47% of your world population, is millennials and Gen Z. These are the people that you are serving. These are the apps that they are using on day to day. They love to go on holiday on using Airbnb. They don't call travel agents. They don't show up to a travel agent. If you tell your kids or anybody now to say take a day holiday and go take a day off and just apply for a housing loan, they're going to look at you and stare. What are you talking about, right? Facebook, for the first time, had 13% decline in the users from after a long while. So the people who are on Facebook right now are 30 and above. A lot of them have exited. So disruption and the speed at which things have changed have moved faster. So it took many years. I think the slides are moving on their own. Can you just stay on the slide? Yeah. The disruption has moved and happened a lot faster than we ever thought. It took a lot longer for Outcry to move to DMAT, but it took a lot faster for Facebook to become redundant. It is going to be even faster for Instagram to be redundant if we are not going to change with the world. Because now, if you ask, where do I message you? It's GroupMe. They are no longer on Insta, or they are only on Insta as much as they want you. And I'm sure if you know them better, there will be accounts where there will be stories that you will not be able to see. And I see some of you smiling, so I know you appreciate where I'm going. They don't carry wallets. I don't carry wallets anymore. When I travel by Uber, it's all on the phone. So yes, there is cash in circulation, but wallets aren't there. It's the phone, and that is the world in which we are going. They love to buy furniture as much as from a Pepperfly or a Furlenco, as much as they would love to go to an IKEA shop. So what's happening today? We are giving the world in which we are going. We are giving our kids an appreciation of gratification. We have made things a lot personalized for them. The way in which baby shower used to happen in our days and now baby shower happens is very different. It's very personalized. The cakes are personalized. The drinks are personalized. There is a lot personalized. Everybody wants experiences. Instagram has now given everyone the whole wanderlust of saying, these are the places I want to travel. The spends that you and I were making, and maybe our parents were making, were very different than the kind of spends our kids want to make. Because they're living in the moment. And that's not changing. And as maybe the urban generation is moving forward, it is the same thing for the tier 2 cities. It's the same thing for the tier 3 cities. The number of, parlors and salons that are growing in the tier 2 city is showing that money is being spent. And it's spent in a very different manner than what it used to be ever before. The generation today is also of environmentalist. So if you ask them, take this printout and put it on a paper I mean, and take this for you. They say, no, why are you killing the environment? I don't need to print so much paper. I can very well read on my machine. That is the generation that is where you will become your main customer as we go forward. They are debating today renting versus owning. They are very happy renting because they don't know whether they'll be in one location forever. And they want everything bite-sized. They don't necessarily buy big. They are much happy buying a lot of stuff in a bit-by-bit manner. They don't necessarily buy big. This is the generation in which we are serving, or the next generation of banking is going to be. So this is your audience. Now, what we need to reflect as we go forward is whether the banking in the future is going to be any different or whether it is going to be the same. Whether they will wake up, open an app every day and say, I will buy, or whether we'll have to change their experiences of what they will see when they go for banking. And I think just leaving that thought, and I'll bring this all together as we go forward. Next slide, please. I think the same thing for the smaller businesses, and it's no different. While I played the whole story for the Gen Z and the millennials, but it's the same thing for the new and the small and the startups and the MSME customers of today, because they are the same folks who want to do things in a very different manner. We all know they currently maybe contribute 30%, but they will go significantly as the new India changes. And they want all sorts of automation because they see the other automation on the day-to-day side when they are an individual customer. So how quickly can I pay my taxes? And am I spending time on non-value adding activities, which I can do a lot faster, more efficiently? And given every business is different, can I have a banker where I can have an ease of credit, who knows me better, not just based on what I say or what income statements I give, but based on my cash, my volume, the transactions that I'm dealing with? Can I do things in a lot more flexible manner? Flexibility, transparency, and speed. All of a sudden, I've become front and center of what banking should be, right? And that's where even the MSMEs' expectations are changing as they work back with new age banks. I still have to, when I have to remit money abroad, a banker comes to me and says, please sign this form, only then we will remit, and please re-sign your passport. And I keep asking, you have my KYC. Why do you want me to again sign on the passport again? Why do you want me to sign the form again when Revolut in a different part can do something very differently? Same thing, why do I have to have a very rigid terms and conditions on a loan where my need is only very different? And again, it's a healthy challenge, and I'm sure the world will evolve in a gradual manner. But this is here to stay. This is something that we are looking at, and that's the kind of problem people are solving. So I think the folks that have understood some of the problem, the folks that have solved a very specific problem, the folks that have picked the pulse of the right set of customers and really understanding what the customer's pain points are some of the neobanks that have changed the operating game in the today's market. Next slide, please. Next slide, please. I think you moved 2 slides. Next slide. That's it. So I think there are, and I'll go more global to Indian and won't spend a lot of time, but as you look at some of the global banks, be it Monzo, be it Revolut on the retail side, it's just fascinating in terms of, the way they make banking easy. And again, while it's very easy to explain, but today, all these banks, and some of them are UK based or Australia, a 3-minute opening the bank account, ability to say, here is where my money is going, giving me a very clear indication of what the charges are, rather than confusing me to say, you fill this form, fill these charges, there will be this charge that will be applicable to you if you take a duplicate statement. They are catering to a generation who doesn't need all of that. Tomorrow, let's just think about it. If Amazon opens a bank, I know they won't, but we talked about trust. We know today if you order from Amazon, stuff will arrive. If Amazon opens a bank, life could be very different. So it's a challenge to think about as we go forward. Free, a lot of things where, charges are taken when appropriate, but attracting customers to say, if you are a young college going student, a free foreign exchange, card where you have no markup, or if you are buying crypto, the way we will help you to buy crypto in a bit by bit manner are kind of the problem statement some of these banks are solving. E-commerce, gamification, all of that available on one platform to make banking fun. Because, their banking is not a activity I need to do because I have financial needs. But the way I go to Instagram to have some fun, can I open a cred and have fun when I'm playing with the coins? Again, there are views around it, but the gist is how do you make it fun? How do you make, a goal of saying, okay, I want to go to Maldives. And today, we spent all our life trying to save money to go to Maldives. Today, if you ask a 21, 22, 23-year-old, they want to go Maldives. And that's their goal. So how do you help them start saving for that goal? That's the bank they want to talk to. And it's no different for a person in Bombay to somebody in Lucknow, because they are all seeing the same thing on Instagram. Information is not flowing now in different ways. They are flowing in the same way because they are accessing the same Instagram as you are accessing. So that's the difference. Same thing on the MSME side, very different problem solving where, and I'm sure a lot of banks in India have done this, as quick integration with accounting. So as soon as my transaction happens, I know exactly, where my accounts are, the reconciliation is done, my payroll is done, my tax payments are done, and a lot of this can be done at a click of a button. And those are the kind of changes the neobanks are bringing. Valuation, because we are all business folks at the end of the day. It's a valuation game, and valuations are here to see. I won't spend a lot of time, but there are valuations or implied valuation, and we've seen the newspaper today with PhonePe valuation as well. Razorpay is going to change again very differently as soon as new valuations emerge. But the valuations are very interesting. Adoption, these are estimates from Statista. The user penetration in US would be about 23% as far as neobank transactions are concerned, and in UK about close to 40%. These are staggering numbers. 40% adoption of neobanks in a bank in a country like UK with average transaction value of 44,000 US dollars. So these are sizable numbers that we can't ignore, and all my ask is to appreciate the hypothesis that because this is reality in some ways. The impact, and these are again hard numbers as far as UK is concerned. The high street banks, if you look at their percentage of retail deposits, from 55%. Gone down all the way to close to 48%. While the overall deposit size has gone up, the percentage of the high street share has gone down. Even post-COVID, there was a bit of a blur, but again, it's the information is telling. And it's not that banks are not doing anything. Can you move the next slide, please? It's not that the banks are not doing anything. A lot of them are setting up digital banks within the banks. It's the same thing in India. A lot of them are looking at, relooking at the branches, cutting down the branches, shortening the branches, making the branches more leaner. In FY21 in Australia, 9% of the total branch network got shut down. In Australia, again, 44% of the ATMs have got shut down. Honestly, so some of it has happened in other parts of the world. Will it happen here? We'll have to see. And some of them have acquired neobanks, some of them have partnered, and I guess we discussed a lot of this in the previous session. So again, nothing new, but there is, I'm just backing it up with some data. Next slide, please. Next slide, please. India's story is no different. I think our percentage of credit to GDP is still a lot lower, compared to any other part of the world. We all know as we get to 25, 26, 30 trillion, whatever the number is, the jury is yet to be out. One thing we know is going to go up is percentage of credit to GDP. We know we are one of the highest populated country now in the world, beating China, and obviously having the largest percentage of young folks in this population who will use mobile phones. One thing we will never go even to bathroom without is our mobile phones. It's a reality, and you will continue to serve. I don't know, but if you realize our average screen time in India is 5 hours. Globally, it is about 7 to 8 hours, and trust me, it's a lot of screen time. And that screen time is here to stay. So as Jio makes internet more and more accessible, and as my colleague was mentioning, more and more telco data is available, they will know you better than you know yourself. We talk about a restaurant, and I scroll down on Instagram and I see 3 restaurant recommendations showing up. So does your bank know you as much as you know yourself, is the question. And it's a good challenge to have. Should I not know my customer as much as I know after doing the KYC? Because Instagram does, Amazon does. How do they know that if I've scrolled in one place, and I know there are challenges around data and the regulator will come along, but it is good to be alive to the possibility that the world around us will change in a very dramatic manner. And how are we ready for that game? Next slide, please. So the story in India is no different, as I said. We have our challenges, in banks about our legacy. We have a different cost. We have a different regulator. We have our challenges around time to market. Sometimes it is, this is what the regulator says. It's completely fine. But interestingly, now, we have a lot of bankers who are wanting to think differently. Let's get somebody from Amazon. Let's get somebody from Google. Let's think differently. Let's try. And a lot of them are also partnering because, there will be a role where you will partner. There will be things that you will create differently, right? So, Razorpay, Neo, and I'm sure you know a lot of these. I won't spend a lot of time boring you, but it's quite interesting if you see what Jupiter is doing with Federal or what FI is doing with a lot of banks. Very targeted, very targeted. They don't want to be everything to everyone. They want to be very targeted. They want to, every saving of yours is celebrated. For them, it's just a picture on the screen, or it's a game that you are playing or saying you saved so much, here is a reward. And all the time it's, I agree that there is a lot of burning, but the hook is unbelievable. The experience is very different. Which is something we have to think about as we go forward. Zoll was another very interesting use case. Credit cards for Indians going to US, where you don't have a credit history. Specific targeted population. First time you go to US, you don't have a social security number. Nobody is wanting to give you a credit card. How do you build a credit history? It's a circular situation. Target those people and target all the immigrants who are coming from different parts of the world and give them a credit card and do it in a controlled manner so that they are able to build. But it's with a very specific purpose. We are helping you build credit history. So all I'm trying to say is, the neobanks of this country are around and they are doing something very, very interesting. Forex card loaded, transfer the money through UPI, load a Forex card, use it anywhere you want, open your app, see an ATM locator if you are in Manhattan or you are in Turkey. It will tell you which exact ATM is close by. And it will give you real time, this is the Forex that we picked for you, no markup. Imagine the experience. And we all said Indian investor is a value, Indian buyer is a value buyer. Why will they not buy? So the ask is at least for the banks to think, are you really focused on the customer and is the customer obsession there or is the obsession moved somewhere else? And trust me, when you go to all these banks, they just keep their website very, very simple. That we are transparent, we are simple, and you can do a lot of things yourself. Because honestly, the kids of today, they don't even want to go to the branches. They are very happy using what bankers call DIY, do it yourself, as long as the interfaces are good. And that's the kind of neobanks, they are very lean and very, very cost efficient because no branches, and a very lean customer service, but effective. And I think that's the game that's being played. Next slide, please. Some interesting partnerships which our banks have done, and this is signs of time to come. ICICI with Neo and Open, Federal Bank with Jupiter and FI, IDFC with FamPay, family-based, investment goals, or telling a 8-year-old or a 10-year-old that, that kid is going out. Now, how do you give them a credit card without any of the details that kid can just tap and go? But almost like a controlled wallet, and say, if you keep your clothes in order today, beta, you will get a reward, and that will create, that person will start learning values through that financial goals that you built in the system. Hey, you wanted to buy that Xbox, how much is the amount? Here are the things you will do. You will do your homework at the end of 30 days, here is a reward. And that's the culture, and that's the mechanism with a specific problem FamPay has addressed. This is very similar to a US fintech called Greenhill. Exactly, very, very similar. But it just creates that whole family bonding, that the entire family is on the app. The parents can see what the kids are doing, and the parents are able to set smart goals for the kids. So, you can embrace the neobanks, you can partner with them, or you can create your own digital banks. What YONO has done, what Kotak 811 has done. Yes, the jury is out. How much of this will be success? But the numbers are not bad. Can you do better? Of course you can do better. But you will have to think, how do I make banking fun, interesting, and engaging for the people? Just having a super app itself is not the end all and be all. How do I make it interesting, just like an Instagram? Why would they come to me? And that's where, we have to be wary of a geo which can create a very different universe. They already started offering, the football we all saw on Geo Cinema, right? We got hooked. The women IPL league, Geo Cinema, it's about time, right? And now we are already using their data. So the world is getting created, and it's only about time, you would go there for something very immersive. And I quite like the comment, one of our colleagues made earlier. We will have a Uber moment in banking again, where folks will buy stuff online and they will bank online. Now, you call it metaverse, you call it virtual verse, you call it whatever. It's here to stay. Next slide, please. Can you? No worries. Next one, please. Yeah. I think our colleagues discussed this, and I appreciate, and I didn't want to, trivialize this without appreciating the regulatory realities in the country. But partnerships are already on. There are digital banks within banks that are being created. Whether some of these neobanks will get licenses, who knows? Who knows? But, there are clear guidelines by Niti Aayog where they will be able to operate in a sandbox. If they are able to do things in a controlled manner, in an efficient manner, neobanks will operate in some avatar or the other. So I think the decision point the banks will have to take in a very controlled manner is, where do I partner? Where do I collaborate? Where do I build? And some of the criteria, next slide. I don't know why. Next. Yeah. I think, and I leave everyone with this slide, is to think about the whole partnership versus digital bank within the bank. Who will own the customer? So a Federal and a Jupiter tie-up. Who will own the customer? Where will you have a faster go-to market? Because ultimately you have to go to the market with a product. Who will bring the better user experience? Where will you be able to cross-sell? When the customer comes through the partnership, will you be able to cross-sell as a bank? What about controls, data privacy? Will you have a say in the product? That gets determined. I think a lot of these criteria will determine where you will partner and where you will build a digital bank within the bank. So I think that's all I had to cover. Hopefully it probably collaborates with a lot of the conversation we had earlier, but helps you think a bit more in terms of what's now, next and beyond. Happy to take any questions. Yes, Ajay.
Is there a proven return on investment on the digital banking part as yet, or people are just building volumes?
I think I don't know. I'm not the expert around the valuations that I was showing earlier, but I think the return on investment on I would say the hypothesis would be no different, Abizar, than a return on investment for a Netflix or an Amazon, where they went through the journey of building the user base. And I think that will emerge. I definitely agree with the point that was mentioned earlier that you can't burn 2 rupees for sake of earning 1. And I'm sure that sanity will prevail. But I do believe, and there will be an element of consolidation in this space as it gets crowded. But given that it is completely digital, the OPEX will be a lot lower. And therefore, I believe, in a longer term, with the right products and the right practices, this can be a very profitable business in itself.
Is there a risk that technology expenditure would become the prime focus and people will end up spending first? Unfortunately, like every other business, the spend comes first and the benefits later. Is there a risk here even more pronounced?
It is. And I think one of our colleagues mentioned earlier as well, when you, depending on who has deep pockets, and that's where there is a big opportunity for banks as well, to try and fail. Because unless you don't fail, you won't know what you're working towards. Because this is a very intensive, hungry process where you will build, you will fail, you will pivot, you will learn. But you will need to, I think what Kotak did in terms of creating 811, just removing it from the bureaucracies of a bank and really allowing folks to work in a sandbox environment, build, fail, learn, is a good approach, for
I guess critical to pivot and learn.
Yeah.
Otherwise you're sunk cost.
Exactly. Yes.
Going from the slide which you showed about partnership with neobank and also owning the digital, except for the go-to-market, the rest of them, including owning the customer, including, tomorrow to provide additional services, all of them, I think the partnership with neobank may not be the right way to go for an existing bank. Is that the inference?
No, I didn't mean that. I think it is yes and no depending on what is very core to you, where you might want to do things differently, and where you can actually partner and do things. See, there will be banks who will say, I will partner, I will learn, and then I might do it myself. But I'll still go to the market and build a brand. Because today, to build a product the way Jupiter is building, or journeys that Jupiter are building, it might take a lot longer for a federal bank and might lose the market share because ultimately the account is opened in federal bank's books. So they are making, the float in their books as well. And Jupiter is obviously providing the service. So rather than losing out the opportunity, you could partner and learn as well. But every bank has their own strategy depending on what they can do themselves faster, efficiently, and where they think, it is just better to partner. Like, for example, if you take the whole MSME space, there are banks like ICICI who built the entire Instabase platform on their own and then partnered with the entire ecosystem. And there are banks like Kotak that have got credible and then got the entire ecosystem along. Everyone has their own strategy and what they want to achieve out of a business.
You mentioned that although there is a huge trust factor with, let's say, someone like an Amazon, they won't get into banks.
Of course.
So why would that be?
I mean, today they won't get into a bank. I mean, who knew 5 years ago Jio would get into a bank? And the way in which they have got into bank, at least I wasn't as enlightened in 5 years ago to say this is how they would pivot. So we don't know how the future is going to shape out. But it's just that given data is the new oil and all these companies are sitting with data where they know you better than you know yourself, they will be able to offer a lot more differential experience and they already have your trust. So I'm just saying being alive to the possibilities around us as bankers is very important. Who knows what will happen? I don't know the answer to that question. Yes.
The biggest impediment would be the regulator himself.
Of course.
If you remove the regulator from the equation, why not?
Of course.
I don't have a question, but I have a comment. You spoke about having to sign multiple KYC documents for remitting money abroad. Please open a DBS account. It's like 4-click journey.
I expected that. Thank you. I will.
Pratik, just want to understand that presently all the neobanks are not REs, not regulated entities. They engage with other banks, and that's why they try to penetrate into the rural market or other markets they want to penetrate into. So, what could be the random or maybe a guess investment into tech? What these neobanks might be looking for? Very heavy, or maybe it can't be into like number.
You mean the dollar value of tech investments neobanks are making?
Yes.
I wouldn't have the number handy. It's too difficult to get what would be the dollar value.
See, the amount of data which, as you explained in terms of being able to collect and then use it for various use cases, do the traditional banks have the appetite to use that data apart from, maybe selling or cross-selling their own products, in terms of finding out the behavior of the customer, where he shops, where he goes for entertainment, where he goes. So that kind of data, even if the banks collect,
they have it.
They have it, but do they have use cases for it to even take it further?
So there are banks that are working on it. Today, for example, when I now fill a petrol and I use my IDFC First credit card, I don't get just a simple message saying so much spent. I get a message, have a great journey now that you fueled up your car. It's a subtle difference, but they have the data, which means they know that I've filled my car and I'm going somewhere. So given the whole account aggregator and the whole framework that is coming anyways as far as data is concerned, trust me, banks are not data hungry. They are extremely rich with data. And there are banks that are leveraging this data and now looking at it not the traditional way of looking backwards, but really looking forward with the data we have. So a lot of banks are investing in this, sir.
Going with the same example what you said.
Yeah.
If you get a message saying that, why did you even fill it up at Indian Oil instead of that you could have filled up at a HP bunk where you could have got, say, a small rebate or whatever. Will that be necessarily the use case rather than just saying that, okay, you have filled up and gone for a journey?
I think what might happen, time is not, it's already happening, and I think there are certain regulatory pieces around this, but if you are passing a mall and if the telco detects that you are passing the mall, very, very clearly you will get the right offers depending on your shopping habits. Where, say, if I am a regular coffee drinker and I am walking say in Atria Mall or whatever, where there is a Starbucks over there, it is very likely that I will get an offer which is curated to me. So that is on the cards, and it's happening in different parts of the world as we speak. Okay, thank you very much. Appreciate your time.
Thank you, Mr. Shah, for that highly informative presentation. I now request our Director General, Mr. Sandeep Khosla, to present a memento to Mr. Shah. Mr. Shah, please. Our second discussion for the day is on the topic of digitization in rural India. May I now request our esteemed moderator, Mr. Harshavardhan S. Bisht, Partner, Financial Service Consulting, EY India, along with our eminent panelists, Mr. Ashok Dhamankar, Chief Financial Officer, Financial Services, UPL, Mr. Prateep Basu, CEO, Satsier, and Mr. Sridhar Ishwaran, founding member, Samunnati Financial Intermediation Services and Services Private Limited, who's joining us virtually today, to kindly join us on the dais. Over to you, Mr. Bisht.
Thank you. Good evening, everybody. This is the session 2.5 hours after lunch. So, and after a lot of interesting speakers. So it's going to be a very interesting session. And I have some esteemed panelists over here, which has been introduced. The topic of our discussion today is digitizing rural India. Yeah, digitizing rural India, especially after hearing Pratik's session where we're talking about Amazon. In fact, he didn't use the word GAFA. Yeah, Google, Apple, Facebook, Amazon wanting to come into banking. But how will it change from digitization of rural India? And let me give you some statistics. If you go back in time, there was a guru, an esteemed guru called Professor C.K. Prahlad. And he wrote a book called The Fortune at the Bottom of the Pyramid. This was written in 2006. When he wrote this book, everybody came back and virtually laughed at him, saying that, where is that fortune at the bottom of the pyramid? It is completely a cost center, doesn't make money. How is it possible? There are organizations who worked on it. HUL worked on Project Shakti, and there are many, many examples. Some of them succeeded in pocket, some of them did not. UPL did a lot of work. We'll talk about it as we go forward. Yeah, but people are still trying to search for that fortune at the bottom of the pyramid. Now, is digitization the answer? Is something which we will try to explore. The fact is, and I'll give you some statistics, in 2006, the RUSU branches, as the bankers call it, the rural, urban and semi-urban branches in the banking system in India were close to 45,000. Yeah. At the end of last financial year, we were close to 1 lakh of branches in the rural, urban and semi-urban area. This contributed to roughly 61% of the banking branches. It was the same percentage in 2006. And I'm using 2006 as a data point because 2004 is when Mr. Prahlad came out with this book. Yeah. So, and if you see, HDFC Bank is talking of opening 6,500 branches, a lot of them in the rural area. So the complexity of rural, can digitization help, is something which we are going to talk to with our panelists and try to unravel what are they doing interesting to help digitization. The fact is, priority sector norms of 40% of banks is not met by most of the banks. Whether it is an SBI, and I don't know if my DBS colleague is still around to say whether DBS hits these 40% PSL norms, the fact is they buy paper because they don't want to go rural. So there is a fortune at the bottom of the pyramid. Everybody wants to attract the higher class, the segment which can make money, but the cost of onboarding is high, the cost of servicing is high, the cost of NPA is high. So to hear this, let's go over to our esteemed colleagues. Ashok, you want to quickly introduce yourself and talk about your experiences and what you/UPL is doing in terms of digitizing rural India, and how can banks potentially leverage that?
Sure. So, good evening. I'll start with my earlier experience prior to UPL. I joined UPL recently in the month of June. But before this assignment, I worked with a company called National Collateral Management Services Limited, which is Fairfax Group rural agri-warehousing company. They are into collateral management, testing certification, commodity management, funding against commodity kept in the warehouses. So there I had a stint of 12 years. I was working as a group CFO there. And while working there, many aspects what we are talking now, because this is the period when, 2007 to 2019, when I worked there, we started a warehousing project wherein locations were selected basis, that time NCDX had come up with commodity exchange. So wherever commodity exchanges had their service center, their delivery centers nearest to the railhead, that way we selected. And in the later part of that, we tried to extend up to constructing silos. So while the journey from agri warehouse to the silos, silo is a vertical steel structure made up of steel, and everything is digitized there. Like you can do fumigation there inside. You can do the temperature controlled environment and the cold storages. So in this journey of 12 years, I found that digitization is helping rural India immensely. Like when we talked about WHR, warehouse receipt funding to the farmers. Like when the harvesting happens, farmer goes to the market, immediately he wants to sell the commodity. So that to stop and give him some value addition, what was done is that WHRs were introduced. Then WDRA came up with EWHR, that is WHR which can be directly connected with the banks, and so that frauds can be minimized. So that way a lot of things we have done in NCML. Then I worked with Samunati for some time with Mr. Shri Ishwaran, and now for last 6 months I am working with UPL. We'll talk about UPL, whatever we are doing in rural parts on digitization and especially for financial inclusion briefly.
Thank you, Ashok. So warehouse receipting, digitization, EWHR, electronic warehouse receipting have made life simpler for the farmer. Let's hear from Prateep. Prateep is the CEO of SatSure. He's doing some interesting stuff from satellite imagery, and I would want him to talk more about it.
Yeah, thanks, Harsh, and good evening, everyone. What we are doing at SatSure, I would like to quote the very commonly used phrase now, which Prateek also in this previous presentation used, that data is the new oil. So what we are at SatSure building is the equivalent of that entire value chain, starting from the satellite itself, which is the asset and the oil well equivalent, the software platforms that are equivalent to the refineries, and the end applications, which are essentially your retail outlets. So at SatSure, we are building a verticalized satellite data firm with one of our key areas of focus being banks. Indeed, we are a young startup, 5.5 years old, and in these last few years, we have been able to create some small dents to the extent that some of the key banks, ICICI, Kotak, and also Asian Development Bank invested in us, where we have been working towards using that satellite imagery, building the models to be able to detect accurately using AI at a land parcel level, what is being grown, create a history of it, digital history of it, which we don't have, amalgamate different layers of land ownership, location, and pricing information to start, becoming a part of the larger digitization journey that banks have also embarked upon, where the transaction costs and the risk cost of lending in rural, ideally is being, let's say, offsetted by using
the digital world that we are talking about. At the same time, we are also collaborating with all the technology players, like Satshore, who is there in the panel. We also look at in terms of the satellite imagery, how it is going to add value, right? Similarly, drone technology, is it going to be beneficial to the smallholder farmers? That way, technology and digitization is an important dimension, and there is a lot of work that has been gone into this space. One thing which we would like to tell you is from day one, it's like 8 years of Samunati's operations. From day one, though we are in the agriculture sector, connected with the smallholder farmers, all our transactions are electronic, meaning we have not gone into a single cash payment or cash collection. All are done digitally. There are challenges, but there are few technology adoptions that we have taken. So that way, in the rural space, digitization is something which is very, very important, and a lot has been already been done. Many of the tech players are doing fantastic work in this space. And Samunati, as I said, we are leveraging those technologies, and how we can take it to the sector that really adds value. There are challenges. As we speak, yesterday I was in a particular blog where definitely, one side we are talking of technology, there is digital transaction, there is digital wallet and all, but still there are some of the farmers who are finding it very difficult to even withdraw a small token money from their bank branch. That challenge is still available. We talk of tier 2, tier 3, tier 4 cities, but agriculture is also further there, So how do you address those issues? That is what a lot needs to be done there also. I pause here, back to you.
Thank you. That's an interesting learning that you've been doing digital collections even with the small and marginal farmers, as they are called, with less than 2 hectares of land, and you've been doing it successfully. That means you're not collecting cash, because in the banking circle, especially in rural India, you collect a lot of cash, and managing that cash is a big, big challenge. And if you have solved it, I'm sure a lot of bankers can learn from it. Coming back to our panelist Ashok. Ashok, let's talk about UPL and interesting stuff on the Heart and Nurture Farms, which they are doing from a digitizing point of view. And how is it that the banks can leverage what you are doing to power the entire scheme of things?
At Nurture.farm, Nurture.trade, Nurture.sustainability, and Nurture.finance. So what we are doing, I'll first take finance as a inclusive finance for the farmers. So what we are trying to do build here is that we have very good data, like as we talked about. UPL has very strong network of dealers, distributors, retailers, farmer producer organizations, farmer producer companies, and also farmers through this network. So that network we are trying to connect with lenders. UPL being a AA plus rated company, we have got very strong network of lenders, domestic, international, and NBFCs. So we are trying to build a platform wherein we can connect lenders with dealers and distributors directly. So here comes a play wherein we are talking about a fintech, wherein this particular fintech maybe 1 year down the line we may try for NBFC license. We are in fact trying for NBFC license, but going ahead, maybe this can turn out to be one of the neo bank, because we are connecting, we are talking to few of the lenders. So by doing this, we are trying to resolve issues in the financial inclusion, wherein farmers, like Sridhar talked about, smallholder farmer, who is not able to get access to finance presently, because if you go to SBI or if you go to any PSU, private sector banks, they'll be asking for a collateral or some security. But here what we are trying to do with the help of network, like suppose there's a distributor who has further dealers, dealer has retailers, retailer has farmers. So with the help of their securities, their vintage, their work, whatever they have done so far with the farmers, will try to provide access to finance to the farmers. Point number one. Point number two is that we are trying to develop a guarantee structure, wherein some guarantee structure, like we were talking to Rabobank, or there are few foundations like Shell Foundation, or there are others like USDFC. So these foundations and these DFIs, developmental financial institutes, and impact investors, they are offering guarantees, which guarantee can be used, like this can work as a FLDG. By using that FLDG, we can explore whether access to finance can be given to farmers directly. Wherein in this particular case, it might not happen that SBI, they might ask 20% FD, but here in this case, on the basis of FLDG, we can do funding to the farmers. So this is on the front of financing. What we are doing in trade is that nurture.trade is a platform we are trying to build. UPL is trying to build it's a marketplace. So on nurture.trade, any farmer, any retailer or manufacturers, they can connect, they can buy and sell inputs, could be insecticides, fungicides, it could be seeds, or any other access like financial services access, like it could be insurance or a finance, or could be short-term loans. So this particular platform, we already have around 2 million farmers listed on this platform. Further services like other additional services on this platform are nurture.retail, wherein you can find the origin of particular crop or a seed for that particular farm on nurture.retail. On nurture.sustainability, like here you must have seen during FIFA World Cup, UPL was one of the sponsors for South American teams, South American regional coordinators and teams. So here company has taken a 1 gigabyte ton of carbon, like when we talk about net zero. So this particular target is, we are going to talk about that in next 2 to 3 years time. So while doing this, here, carbon credit is another big area wherein it's likely to be a bigger market, maybe $200-300 billion. Maybe it can go up to $1 trillion, maybe over 4 to 5 years time. So what UPL is trying to work on is that how the benefit of carbon credit can be given to the farmers ultimately, because agri as such contributes around 20% for the carbon emissions. So while when the methods or like seeds or insecticides or farming techniques can be explained to the farmers, and for that farmer can be given a benefit which it might happen that farmer get a credit for that particular activity, but that activity or getting a credit, monetization of that might happen maybe a year down or 2 years down the line. So when you talked about financial products keeping this into account, we are trying to see how this benefit of carbon credit can be given ultimately to the farmer, and not at the end of the 2 years or after getting the cash, but ahead of that.
Thank you. That's phenomenal. I didn't know UPL had made so interesting platforms on helping the farmer and the value chain, and coming in where the banks are not able to fund them, especially because they don't have collaterals. And the sustainability part, getting the carbon credit to the farmer last mile. I thought sustainability was only talked in Davos, but getting it to the farmer is the ultimate last mile reach. Pradeep, coming to you. Interestingly, I read somewhere that you were working with TransUnion Sibyl and trying to create you've already come out with a credit and farm report. So is it time to create a land fertility score or something like that, which actually can help banks to look at this is the land area, this is the past data based on which how fertile the land is, and hence a traditional banker looks at ability to pay, intention to pay, and whether the farmer will have the money to pay in the future when the weather is good, bad, or when there is rains. Has the time come, and what are you thinking in that dimension?
So let me kind of begin by highlighting the 3 key risks for lending, doing farm lending in not just India, everywhere. So you have the character risk, you have the collateral risk, and then you have the capacity risk. Character risk is something that through bureau scores, built over transactions, you are able to gauge. But unfortunately, no agri loan product can be built on a bureau score alone, because number one, especially given the kind of structure we have in India, a lot of farmers will have -1 CIBIL score. A lot of them will have very poor CIBIL scores because loan waivers have happened multiple times. So many of them are NTC, new to credit, and hence the capacity risk becomes a major part which was vacuumed. So what you're speaking of, the land fertility score, that was something which most of the banks were already thinking of how to address when we started working. So I'm just giving the journey that how we came into picture. So I am actually not from a banking background. I used to work in ISRO. So did my co-founders. Had nothing to do with banks. So first part was solving the low-hanging fruit, which was reducing the cost of monitoring and servicing and all. And then they said, hey, look, this kind of all these parameters are categorical. Can we build something of a categorical score which highlights this? So we at SatSure built that what we call a SAT score, which is nothing but the capacity of the land to generate income. To achieve that, we had to identify the crops, its production, like area and yield, and also the price at which it might have been sold. So the minimum at least price. Each one of them, solving each one of this problem was a massive amount of data collection, analysis, cleaning, and validation. Now we did arrive at the score sometime late 2021, and then we realized that okay, all this is great, but it still might not, TLDR version is that satellite data will not predict delinquency alone. So then we started working with CIBIL. We announced it. We announced the CCFR report, which you saw only in November, but we have been working with them since March, where the combination of intention risk, the capacity risk that we have built, intention risk that bureaus with rich amount of data like TransUnion, CIBIL have, and obviously the collateral, which is the land here, because KC is a land asset, land-backed loan. All that could be brought together to create a new product, which is a combination of the fertility and the intention and the collateral. So yes, that is the holy grail, I think, for the agri-finance industry. We have some parts of it. Now that we have joined hands, the idea is that very soon we should be able to come up with the composite single score.
Fantastic. First of all, I'm so glad that scientists from ISRO are coming into helping solve a farmer's problem and helping propel the entire banking story and making the bankers realize what they are not doing. And just that I get my coordinates right, if I am a small and marginal farmer in Haldwani, for example, you sitting wherever in the world can actually point out what is the area of my land, B, what did I sow last year, last to last year, previous year, what was the output out of it, and if this was the output, this is the value I would have made on a year-on-year basis, and based on that you create a score along with the CIBIL. Is that a right statement for a simple layman?
Yes, all the things except the first part, meaning that from the satellite data, we cannot pinpoint where your land is. That is where the revenue record comes in.
Okay.
Yeah. So once the revenue record, which identifies this is your survey number, Khasra 712, okay, once that is there, yes, all the data layers can be generated. Satellite imagery is a continuously available imagery with history. You point where your farm is and all that.
Okay, so all you need is a Satbara, and once you get a Satbara, rest is history. Phenomenal. Coming over to you, Sridhar, you have a very interesting name of your organization, right? And I understand that it stands for Samuha Unnati of the farmer, especially the small and marginal farmer. So help me understand, how are you helping in that journey? You did touch about it earlier in the previous talk, but help me understand it a little more better. How are you making his life simple, and how is this Samuha Unnati coming in for the farmer?
Good question. Samunnati is a Sanskrit word, Sam and Unnati. Collective growth, collective elevation, collective prosperity.
Wow.
And if you see the way the farmer is today, he has to run across for all his requirements. He has to go to the local input shop to buy the inputs. He has to depend on a local trader or a aggregator who can sell his commodity on harvest. Similarly, if he wants to have any specialized services, he needs to run around. The way Samunnati looked at all those challenges faced by the smallholder farmer, what we did was we kept farmer at the center, and we did a digital connector around him. understanding, because any farmer at a local village is connected to a farmer producer organization or a collective, or today BLE, where he takes care of all the input or the output. So we build the digital connector around him and make him available all his needs. If he wants some inputs, how can he get connected to the input suppliers, manufacturers who can give him a better quality inputs? Similarly, on harvest, how he gets connected to a better marketplace so that he is able to sell his produce. At the same time, when there are so much tech available, how do we make him access to the technology and some of the other services which he wants? So that way, Samunati's approach is always keep farmer at the center, build the digital connector around him and make him enable everything through the collectives or the FPOs so that they...
Fantastic. You lost your feet, but keeping farmer at the center, and Pratik mentioned keeping customer at the center and being obsessed about it. I think that's what is Samunati trying to do, keeping farmer at the center and making sure that there is the digital connector, and we as consultant use the word ecosystem. So they have created a digital ecosystem around farmer at the center. Phenomenal. Just conscious of time, one quick question to you. What would be your advice to banks? And this is to all the panelists, and I'll go alphabetically. Ashok, starting with you. What are 2 points of advice you will give to banks to help digitize rural India or push the financial inclusion agenda into the...
So I think banks have to see from the perspective of not from the credit, like farmers may not have a credit history, but some innovative products like guarantee structure, or they can look at vintage, or they can do a engagement with other large organizations like UPL who are in the market. They have their network of distributors and dealers. Keeping that in view, banks should look at extending credit to the rural parts of India. That is to the farmers.
So they should look at newer models to evaluate the credit of the customer, not look at it the traditional manner, collaborate with people to do that. Pradeep.
Well, I think we can already say that banks are more technology companies. They are more tech companies than many of the other tech companies who claim to be.
Yeah.
The issue here is that many a times banks do end up going for the smaller wins because it keeps the wheel rolling. But when it comes to the rural financing, rural India story, I think it's a long-term game. And my only advice to all the senior members in banks who are present here is that it should be also dealt that way, meaning there are so many different new challenges which are unique to rural India and rural financing. And while technology is an enabler like what I am speaking of, we should always look at it from problem-solving perspective.
Look at technology as an enabler and look at it from a problem-solving perspective. Be there in the longer haul. Sridhar, are you back?
I am back.
Okay, great. No problem.
Yeah.
You can close the last version and also answer my last question, which is what is your advice to banks? What should they do to increase?
Basically, what the bank should do is, am I audible now?
Yes, you are.
Yeah. So basically, you should not look at only the credit or the bureau check. Today, there is a lot of data available where, you can get into in terms of what is he growing in his farm, right? More than that, if you can also get into details in terms of from where the inputs are being bought, where the outputs are getting sold. These informations are available that will get you a better comfort for you to customize a product and give the loan. So you should not look at only the credit bureau check or what it is, and never look at a farmer only from a transaction point of view. Look at him as a relationship where you can build him in terms of, this is what he has been doing. These are the crops he is growing. Is he accessing the better technology, right? Is he able to get the better package of practices? And there is a consistency in terms of income. If these are some of the things that a banker can look at it becomes easy for them to, lend them formally. So that's what I mean. Yeah.
Fantastic, Sridhar. I think the common theme emerging amongst all three of you all is bankers need to look at newer models. Data is the new oil. There is a lot of data which is available. How do we leverage that data? How do we leverage that partnership and push the financial inclusion agenda? Don't look at it as a transaction, look at it as a long-term point of view. Thank you so much, guys. We'll open it up for questions. We have time for a couple of them. Any questions, please feel free to ask. Yes, Mr. Devaji.
So, we saw Pratik's section where he said that the Gen Z is all willing to use the internet, all willing for customer service, all willing to, so used to using the data. It's the banks who have to respond and come up with channels. With farmers, it seems to be the other way around. Are they really inclined to accept technology so that they can be mined better and hence they can be done business with better? What is the experience of Gen Z?
I'll ask Sridhar to answer this question first, because farmer at the center, creating a digital ecosystem, that is what he said. So Sridhar, could you hear Abhiza's question?
Yeah, I could hear, and it's a good question. The technology, whatever is available today, and everybody is there into this, the farmers are able to get access to that, because if you look at 30% of the farmers are having smartphones, because all your technologies are built on smartphones, and every rural household has got a smartphone. A son or a daughter of a farmer is having a smartphone. Today, he is able to get information of, what is the commodity prices in the local mandi. Today, the technology is able to enable him, telling him in terms of what is the weather in the next 1 week. Is it going to be rainy? It is going to be windy, so that he can take preventive action. Tomorrow, the technology what Sammunity is also built in, we are able to pass on lot of information. We built something like a robocall, where we are able to push in lot of advisory information to the member farmers through the app. So that way the technology has reached them. Yes, I do agree. Adoption is a little bit of challenge there. That's where you need to build that institutional capacity building so that you are able to go and talk to them. And very important is, many of the tech players with whom Sammunity has also interacted, we do understand the regional language. So all these apps are available in the regional language also. So it's that farmers are aware of these technologies, they are using it. Yes. Yeah.
Thank you, Sridhar. So the farmer has access to the same TikTok videos, and he makes the same TikTok videos as we do. It's a question of banks reaching out to them, and leveraging their knowledge and this. Somebody did talk about financial literacy, but that's it. Yes, sir. Question.
My question is to Ashok. You said about the nurture.trade. Is it a global platform or it's a local platform? Secondly, I know UPL has a bigger presence in Latin America.
Yeah.
Have you looked at leveraging this in Latin America with the farmers there?
Yeah, so nurture.trade, nurture.farm, this is a technology platform. It is a global platform, but Latin market, their farmers are little richer farmers, holding or having land mass higher than India. Like in India, when we call a smallholder farmer, he holds land of less than 2 acres. So presently, like last 2 years, we are working on this. It is yet to be launched in that market. And yes, what you said is right. Latin market is one of the largest market because 2019 UPL bought a company called Arista. It is based out of Brazil. So Brazil, Peru, Argentina, Mexico is the largest market, and it contributes about 20-25% for the entire top line of the company.
Good. We have time for last question. Yes, sir.
One small, first of all, congratulations, Pratik, bringing the top view ground to the ground level, actually the root level. Now, Mr. Ashok has posed one problem to you, like if you are having a top view of a field, of say whatever yield. So there is always a slip between cup and lip in case of agri products, last minute rain or whatever. So what is actually available with them, a measurable yield, is the silos which he has created, multi-level. So your top view can get a MRI section of these silos. Whatever bank will be happy to know the real yield, not the acreage of the field. So whether his data, which can be picked up by say this moment now, say Maharashtra, this zone, Vidarbha, for example, will have this much of surplus stock or whatever, and can be exported. Some key decisions can be made on that with your technology. Since it is gone multi-layer.
Okay, so if I've understood it right, the question is how can something like what we do be used in conjunction with some of the other data sets which are on the field for decision making across the value chain, not just banks. Is that right? Yeah.
I mean, commercial decisions,
Commercial
whether to fund him for whatever short period, short-term loan, or maybe export the surplus, guide the farmer accordingly.
Right. So absolutely. While I only highlighted on the banking side, there are multiple applications. So I'll quickly just run through the value proposition at each and every level of the value chain. So from a banker's perspective, the fact that they can do a 2 lakh rupee loan in 20 minutes and 50,000 loan takes 30 to 45 days. Okay, that is the journey which we are helping them build to go, from 30 to 45 days to a few minutes. So that's one value proposition. From a farmer's point of view, going and standing in queue at a public sector bank outlet or having so much delay in getting loan from a private sector guy who's maybe visiting his house, that's a big change in status quo. So that's ease of funding or ease of access to funding. That's one use case. Now, one is, you mentioned exports. Now, there are different ways to disseminate that information. For example, you can disseminate that information through KVKs as to what crop he is planting. If the crop is, let's say, it's a cash crop, then what has been the already potentially planted acreage in the neighboring places, because all of them will go to the same set of markets, right? So these are also commodities which are globally linked, like chickpea, for example, guar and all. So and the countries that are affecting the prices, especially of chickpea, because I mentioned that, like Australia, their seasons are inverted in southern hemisphere. So having that information prior, which can be generated, because from top you are generating supply data, what supply is going to come in the market, right? So that is another kind of application. We have been working with also several government agencies. For example, with the Ministry of Agriculture, we have kind of worked through an SOP, like a SOP for doing the yield estimation and loss estimation whenever there is a natural disaster event, so that the claims can be number one, settled with a trustworthy and verifiable data. So that is another application, getting the claim, insurance claim faster. Then government of Telangana, for example, uses this information to do the MSP based procurement. So that's essentially getting the farmer the ease of selling his produce and at the set price. So see, the data that we work on, it can be modeled in different ways. A bank may only use a score and the compliance stuff. Someone else, like a seed company in US, they use it for doing what they call as crop phenotyping. They are making climate resilient variants of their some of the hot selling seeds in Brazil and Argentina using this data. So the value proposition of data is spread across like different sets of users, for farmers, for bankers, for governments, for insurance companies, seed input companies. So it's just how many products can you build at the same time, right? So yeah,
progressive technology. And
Yes.
just out of curiosity, what is the least count? What is the smallest plot you can grasp? You can extract information from?
That's a
About
great
acre
question.
or something?
It's a function of the spatial resolution of the satellite imagery you are taking.
Okay.
So for example, what we are using currently is publicly available satellite imagery from European Space Agency, which has a 10-meter pixel, which means it's a square of 10 by 10 meter. So if you take an acre, that's 4,042 square meter. That's 40 pixels. So 1 acre can be easily, like even half an acre can be absorbed. Now within that half an acre, you went on to plant a cauliflower and a chili and all that stuff, then obviously the models will go for a toss. That's the truth. So the only way to improve that is by going higher resolution data, which is one of the reasons why we are investing 240 crores to have our own fleet of satellites, because such kind of high resolution data only 3 companies in the world control, and most of it is going for defense. No one is thinking agriculture, finance and all, because this is not a sector that has traditionally shown any demand for it. We are the ones who are creating the demand. So it's the harder road.
Thank you very much. I think you put it right. If I am a salaried guy and I need a loan, I can get a 2 lakh loan in 2 minutes, actually disbursed in my phone, sitting here right now. But if I am a farmer having less than 2 acres of land, and I'm somewhere in, again, Haldwani, it'll take me 35 to 40 days. In fact, EY has done a survey of KCCs.
Concern is of the rear end, to receive it back.
Absolutely. So that's the problem banks will have to solve to digitize the entire thing. I'll end by saying there's some good news in the table. The Ministry of Agriculture is working on what is called the India Digital Ecosystem for Agriculture, IDEA it is called. And the objective is to create an equivalent of a Aadhaar ID, a farmer ID, which has all the farmer information, which has his land records, which has his past history, etc., and agri data exchange. And it's a fairly large subject of the central government, and then the state governments are working on it. How do we know about it? Because it's powered by EY. So EY is helping the government do that. We believe it will be a UPI moment, but it is 3-4 years down the line, and it will also depend on how the states adopt it, because it needs center and state collaboration to do that. But let's wait and watch. This is going to be an interesting field. Farmers are the ones who will power our 30 trillion economy, and hopefully digitization will help reduce their cost of getting financial services onto them. With that, thank you very much. You've been a great panelist. I've enjoyed this session. I've learned a lot. Thank you so much.
Thank you so much, Mr. Harshvardhan Bisht, Mr. Ashok Dhamankar, Mr. Sridhar Ishwaran, and Mr. Pradeep Basu for enlightening us with such an insightful discussion. May I now request Mr. Sandeep Khosla to present the mementos to our panelists.
Photo be on the background.
Yeah, you should have also.
On the background. Projected on the background. Mr. Dhamankar. Mr. Pradeep Basu. Mr. Harshvardhan Bisht. And thank you so much, Mr. Sridhar Ishwaran, for joining us virtually. Thank you.
Thank you.
Now we come to our final panel discussion on artificial intelligence and cybersecurity. I have the privilege of requesting our respected moderator, Mr. Dilip Panjwani, Global Head, Cybersecurity Practice and COE LTI Mindtree, along with our esteemed panelist, Mr. Anu Tiwari, Partner, Co-Head FinTech, Mr. Karthik Shinde, Partner Cybersecurity and Data Privacy EY India, and Mr. Rajesh Thapar, CISO Axis Bank, to kindly come on the dais. Thank you. Over to you, Mr. Panjwani.
All right, good evening, everybody. So I think we've been talking about banking, neo-banking as a theme throughout the day. And we'll just take it further one step, looking into the security aspects and where AI is helping in that space. So from a theme perspective, when you're looking at this topic, we've seen that neo-banking has picked up over the period of COVID. The transactions have become more digital. Demonetization has also helped this space. And people from the Gen Z are now looking at more transactions which are contactless, virtual, online, and on tap rather than doing physically at the branch. With this, the infrastructure for the new age bankings are all going online. They are all being in a virtual environment. This also attracts a lot of chances with regards to the threats coming in from the cyber world. And hence, it requires a discussion at the table to understand what are banks doing in that space and how are they tackling this threat. And looking at the volumes of transactions that are involved, it does not appear that you can do it with humans to really monitor those transactions or protect from those threats. And hence, the topic of looking at how does AI really support in this aspect. So coming to this discussion, Rajesh, you have been you are right now CISO from Axis Bank, and you are looking at all online transactions that are happening today. How do you see the threats that are coming up? Are they something that today are growing, or are you seeing that they have come stagnant after we've come out of the pandemic period?
Yeah, hey, good evening, everyone. Thanks, Philip. Threats are not reducing by any means, and while the attack vectors are changing. Okay, so primarily over the years we have seen on the net banking side or the online transaction, if you call, the infrastructure in the organizations have changed. Primarily earlier it used to be the perimeter, which you have a boundary of, and then you have one DMZ, you control that DMZ, you are reasonably sure that what you are doing. I mean, I'm saying 15 years back. Today your infrastructure or your devices are in people's homes. So people are connecting from home. So the threat vectors are totally different. So, I mean, there are two ways to look at it. One, if you're looking for the channel threats are increasing all the time. But on the work from home side, the threat count are multiplying. So if I say over last 3 years, the attack vectors on the work from home devices is at least 3 times what it used to be, maybe pre-COVID. Because people are operating from there, you are allowing that work from home to connect back. Networking is becoming very, very easily accessible. 5G is going to make it much more rampant. So the number of devices that can get connected will be running into billions of across the country. So from anywhere you have to open these channels, you have to be sure of what's coming in. So threats are not going to reduce, threats are going to be there. Now how do you control it, to what level you can go in? And with this comes the resources that you have to deploy to manage it. And also, can you prevent everything? You can't. The best and the most secure way would be stop business. I mean, that's the last resort, where you will feel comfortable and saying, boss, I'm disconnected from the world, no threat can come in. But then your own existence, your organization existence, everything goes for a question mark. So how do you keep a balance is the challenge today.
Perfect. Thanks so much, Rajesh. So, Karthik, when you look at taking the cue from what Rajesh just mentioned, now the infrastructure is growing. The threat attack vectors, which were the perimeter level first, now have become at every household, at every device which is connecting back. Not only for our customers, but also our staff for the organization who are supporting that. How are we looking at the aspect with regards to the cyber defense? Because you can only have this much amount of money that is given as a budget. From a traditional bank perspective, it was a certain percentage of the IT budget, and IT budget was a certain percentage of the revenue that the company really brings in. Now, with the new age bankings coming up, they do not have really the capacity or the workforce to really support such volumes and transactions which are already happening on their platforms. How are they dealing with regards to cybersecurity and cyber protection for their organizations?
Right. So I think we started off with a number of problem statements here. One is the topic of today, digital disruption, neobanks. We are getting there. We're going ahead. What is happening as a result is, like you said, information overload. There's too much of data that's coming in. The perennial problem of the security warriors, if I may call it, who secure banks, and other organizations. Their problem has always been to zero down on the threat and mitigate those threats in time, right? while that was a problem, the industry was also plagued with another problem of skill sets, right? So people was also a big issue and started becoming a bigger issue now. Now, given all of this, and the multiplier effect is that whatever you may do, how much ever efforts you put in, you're always going to be one step behind the so-called hackers who are actually targeting your systems, right? And I think that's where the effort now is up to how do you automate some of these tasks, make things a little more faster, more efficient, so that you address some of these gaps, and then probably put yourself up in the curve so that you stay on top of what's happening, what's going wrong, and things like that. Maybe I'll elaborate more with examples, but that's my perspective.
Sure. Thanks so much, Karthik. Anu, just taking a cue on the same point which Karthik just left off right now. When you're looking at automating and trying to bring in more perspective of speed of operations, how do you see AI coming up in cybersecurity? Or what do you see perspectives of these new age organizations and new banks? What are they? How do they see cybersecurity? One, and secondly, how are they adopting artificial intelligence towards this?
Right, Dilip. Firstly, thank you so much. I think the response to this is where you are on this depends on where you sit in the value chain, because the risk is very different from a bank to a non-bank, deposit taking, or even otherwise, even a lender, digital lender, an asset manager compared to an insurer, and leave the whole fintech discussion out, because that is a far bigger issue in terms of data and cybersecurity. But if there is one area which is probably giving regulators nightmare, is at some level this. Exactly for what Karthik said. You can only confirm at this point in time that I'm in compliance. The next second you don't know. And I think there are two parts of this. One is data and one is money. At some level, again, people are touchy about data. But if you lose your Facebook pictures, knowingly putting them out on Facebook, which means let the world see, would you really care beyond a point, as opposed to losing real hard money? So businesses which are in financial services or are quote unquote flirting with the world of finance, that borderline fintech, tech fins, and also because they're not within the regulatory ambit. So that the whole issue, if you see, people always ask who, were you sleeping as a regulator? Questions come up, everywhere, right? So I think the challenge is, what do regulators do? And which is why, if you see in the last 2 years, a walled garden has been created, at least by the RBI. Be it your card issuers and card schemes, in terms of them not sharing data and confirming the data has been purged forever. Like a huge requirement. Tokenization, a huge topic. Payment aggregators, banks. So at some level, leave the whole data-related discussion out, from a digital data protection. You have an RBI which has anyways created its own data regime. I think coming to the whole AI point, I think it's far trickier. Because it's leave ChatGPT and where it is going to go, and end of banking, as we know, kind of discussions. But we already have chatbots. There are two types, which is brain dead and there is a brain. The NRP, NRL, call it whatever, right? So today at some level, even we are comfortable talking to a bot as opposed to a human being, because the experience is, for whatever reasons, far better with a bot, right? So it will keep increasing. But is it only going to be a communication mode in financial services, or is it really going to take over the role of a banker? Leave the ethics part out. Nobody knows, if you mis-sell as a bot, whose fault is it? There are far bigger issues. I think there was one example I had read last year, an economist, which said that somebody could hack a casino via a fish tank. I don't even know how it is possible. Yes. And in terms of, I think the point Rajesh made about going offline and being secure, there's a famous story how certain governments could blow up nuclear reactors in Iran which were offline. So you don't even know what is online, offline anymore.
Very true. So when you look at the new age banking organizations today, which are fully online, fully on the cloud, they don't have a physical presence, or organizations which have shrunk out their physical presence, how do you see their risk levels today when it comes to cyber attacks? Because they have zero footprints, near zero footprints today on premise. That means they are always non-branch servicing to customers. That means if a malware attack or a ransomware attack happens on the environment, the entire infrastructure is down, and eventually they have no other way to really service the customer. Or let's take another aspect of it, that the Gen Z, as we spoke about in earlier discussions, they do not want to really visit the branch. Like my son doesn't want to go to the branch and stand in line at all. He just wants it online only. So for him, even if there is a physical channel available, if the online channel is disrupted, he would find it that the branch is or the bank is completely down. How are we dealing with that kind of a risk today, and what do you think that are the best practice or frameworks that can be adopted to really support this? Karthik, would you have some views on this with regards to how are you seeing customers get more cyber resiliency into their operations specifically?
So I think from a resiliency perspective, I think there's a huge area of improvement. I think what we are seeing recently from the regulatory aspect, there is a big push in terms of some of the incidents that have happened in the past, and without quoting any organization, I think we all know that there have been incidents with where there has been a disruption, and the end customer is at the receiving end. Whether it is not being able to transact, to transactions not going through and things like that, right? Whether it is internet banking, mobile banking, and these are some of the non-negotiables this day, right? So like Pratik highlighted in his talk, today you have the Gen Z specifically have access to and are used to applications or apps which are perennially available, right? You will hardly see a Facebook or an Instagram going down and you can't do a post, right? But the same thing when it happens to a critical service like doing a transaction, or most of the times we might have seen the UPI transaction just doesn't go through and the messages server is busy, right? It just puts them off, right? So resiliency is definitely a big thing. I think organization banks are working towards making infrastructures, looking at more from an availability perspective, creating redundant architectures, putting in mechanisms in terms of the end user experience, and then designing and defining those resilient architectures. So there's a huge effort that is going on. I mean, we can see it because most of our clients have now come up with requirements stating how do we build resilient architectures from the ground up, especially the ones who are undergoing a digital transformation or a technology transformation. Resiliency is at the heart and core of it, right? So right from building up an enterprise architecture at the design stage to going and building redundancy in every device, every network device, every system, every application, every middleware, API ecosystem, at all places, at all levels, at all layers, there is thinking that's going through in terms of how do you make it possible, how do you improve the overall end user experience. So I think that's a focus. How do we relate it to AI? We'll probably more for discussion.
So Rajesh, coming back to you now, taking cue from what just Karthik mentioned. Now, these are control frameworks typically most of the larger organizations will be already having today. They'll be much more mature in that space. But the newer fintechs and the new banks that are coming up and the newer smaller organizations that really work in this space on the entire digital ecosystem, especially in the payment space, how do they really, what kind of control or frameworks do you suggest from your experience that they should at least have in mind when they are setting up such infrastructures which are digital only, which are always online and are more susceptible to attacks?
It's a very difficult question, to be honest. Okay.
That's why I love being the moderator out here.
Yeah, if you put yourself, that's why you got a moderator. So if you put yourself in the shoes of an organization which is a new bank, which has just come up the curve, I mean, budgets is a big constraint there, right? So everything that they invest, they immediately want ROI, unlike an existing organization which is large enough wherein you can defer that. So in something like that, how I see it is, if they are participating, and one of the key elements which we probably, in my earlier talk also I missed out is, which is actually transforming this entire space is the partner ecosystem. No entity is today in isolation able to work. The partner ecosystem is, you have integrations extended to organizations, to individuals. Your extranets are everywhere. Right. So these entities, when they integrate back with any of the organizations, they may become a weakest link. Right. So primarily the expectation from them would be definitely to meet the posture, the security requirements as good as a larger bank. Because when an incident happens or a breach happens, the impact will be felt by every participating entity, whether it is directly or indirectly hitting the supply chain. Right. So it's important that the risk assessments are done more granularly. The appetite is defined, because that's where the call will have to be taken. What is the risk appetite that particular entity, and what are the risks that are acceptable in that particular scenario is not something I can pass a generic statement as I can do probably for a mature organization where there will be a similarity in the risk appetite. But in case of fintech, in case of these neobanks, the risk appetite will be important to absorb and map it with the budgets that are at hand. AI plays a larger role there because they have limited resources. They can't put people there. The volumes that are coming up on transaction set, the number of devices, the traffic that will be flowing around is massive. The challenge, again, AI is a good solution per se, but it's not a comprehensive solution. So AI is, I would feel that it's a buzzword, to be honest. Still, it's a buzzword. See, when I did my engineering about 28 years back, we read AI as a subject where the use cases were primarily around gaming. You have a chessboard, you have decision trees. So all our practicals and all, whatever we could develop was only there. After 20, 25 years, today we see the use cases of that being extended to a lot of other vectors. I mean, today you put in fraud detection, you put in anomaly detection, a lot of tools are coming in. All that hype cycles of zero trust, micro segmentation are all possible because of this particular AI model. So investments are required, but how much is a call that will have to be taken, how much you have at stake, both from the business opportunity perspective, how much you can invest in the organization, and how you can mature your models. So there's no right or wrong answers in these. Primarily, it is a journey with learnings that you will have to keep improving upon.
I snatched the mic from Dilip saying that I want to take a shot at what Rajesh just said. No, so I think, Rajesh, valid point. I think what we used to, play around in college around artificial intelligence, I think we've come a long way. And, we were just playing around with ChatGPT, and I don't know how many of you in the audience have actually, queried and played with the tool. Yeah, so we have one. So I think, it's generative AI. One small application of, in the AI world, it's able to generate responses. And people have been taking it a notch higher by, actually asking the AI to write code, for example. Developing your own business plans, and so on and so forth. And today, and while ChatGPT have put in constraints around what people can request. So for example, if you ask ChatGPT you have to ask it, right, in plain English language, but in a conversation style. And if you ask it to write a phishing email, it will give you a response saying that, this is ethically, this is not, right, and you should probably not indulge in this activity, and basically responding saying that this cannot be done, right? So it's been trained to not, go into the malicious, side of things. Today, I read a report that, and this is a report by CyberArk, it's a cybersecurity product company. They have managed to generate a polymorphic malware, not just malware, but a polymorphic, which means the malware mutates itself, which means it's difficult to detect, right? By the antivirus and the endpoint detection, all the useful software that we have today. And it was possible to do so after repeatedly training the AI, saying that I need this answer and commanding the AI. So it's also going into a direction where you are actually able to, the attackers were social engineering you and I by sending us, tricky emails. Now you are able to social engineer the AI as well, where you are tricking the AI to actually give you the information that you want, despite the AI being designed and put controls that it should not respond to a particular activity. And that is taking this whole cybersecurity risk in a completely different zone. So I was zapped, so I thought I'll just...
No, you're right. Adversaries are actually adopting it much more than the defenders. I mean, today that's the scenario it is.
It is, in fact. I had a similar kind of experience also when we were kind of having debates with some fellow CISOs in the industry and kind of having a chat, and similar points that you raised out on having some boundaries on the ethics part of it in the AIs today is a must. But I see that AI is being leveraged very heavily by the attackers more than defenders today. And is there a way that the defenders are looking at adopting AI more strongly? Are you looking at that adoption happening more? And what could be the scenarios that really AI could help the banking world today or the payments world today to secure transactions?
Yeah, big time. I mean, today, whether we know it or not, I can tell you lot of the tools that are coming out in the market today are having AI ML engines behind it. So it's not traditionally the classic code that you have a rule based if else condition. All of the guys who would have done coding at some point of time had if else. Fuzzy logic was only in the books. But today that logic is practically there in almost everything that you do. Chatbots is something which we just discussed, the NLP, Alexas of the world, which anyway is there. From a cyber perspective, your anomaly detection is not possible without, all those, rule-based tools, antiviruses and all which typically earlier used to be there, which is signature-based, is no longer valid today. It is there, but it doesn't protect you against a lot of variants, like something like which he was mentioning, as polymorphic stuff. The more you need is the behavior anomaly detection tools, which keep baselining your traffic, your user's behavior, your device behavior, your connections, and then throw you an alert, boss, this doesn't look usual. And that is something which is the need of the hour, because of the volume of events that are getting generated. I think if we just take an example of some larger organization, larger banks, they have 1 lakh plus devices sending logs to a SIM, to a SOC. 1 lakh devices. And the events per second that are coming into the SOC are running into maybe 1 million, roughly to that range. 1 million events are coming in. How will you expect somebody to go and look into where the things are going wrong? So you need these engines to help you correlate, give you the prioritized alerts which you can actually act on. So at the same time, it helps you reduce the number of people that are required in the first level of monitoring. But I don't recommend that you remove all the people from there and say, my engines are doing everything. It will not help. So you need to figure out, but at least that will give you prioritize it. It does correlate a lot of things and tell you of those 1 million events that are coming in, I see these 20. That 20 should have minimal false positives. Because that engine, that is something only an AI engine can give. That's one example. Fraud detection, again, is a very important thing in banking industry. Real-time transaction monitoring is only possible if you have engines which are learning all the period of time, how you have been transacting, what time of the day have you been coming, what is your normal mechanism, or which tool do you come from? Are a mobile banking user usually, or do you come from web interface? What time of the day do you interact? So a lot of these engines they automatically keep on learning, and that's AI. You may have neural networks, all those buzzwords of AI, deep learning, and whatnot. But behind the scenes, these learning mode, the reinforcement learning models are something which is there today. UEBA, I mean, for the guys who have been working in cyber world, the user and entity behavior analytics. If my machine, which is there in the environment, has only been connecting to these 3 servers throughout the week or throughout the year, I have been baselining it. All of a sudden, I see this machine trying going elsewhere. I probably have an alert. This can only happen if I have somebody observing, monitoring in the background. It's not a human. No human can come and let us know on that. Security posture, I mean, your attack surface, I mean, biggest thing, your attack surface is beyond you. Today, the attack surface for most of the organization, I can say for myself, I can even say for any of our organizations, we keep discovering our attack surface. We don't, earlier we used to know these are our boundaries. Today, the attack surface is also those engines which are running are AI driven. So AI is almost everywhere. Now it's up to us how best we can make use of it. How do we balance out the use of AI against the adversarial effect of it? Because the ethics and all that also play, whether you want everything to be taken by AI or you want some work done by AI and you have your own decisions. So that's a call that the organization will have to take.
Thanks, Rajesh. Anu, from the point that Rajesh just put up, that AI cannot be the answer to everything. It has to be selective. It cannot be taken up for any and every use case. How do you see this statement when it comes to neobanks and the new age digital banks or fintechs coming in?
So Dilip, just on the previous point, and to take a bit of a contrarian position, I'm not sure how many here have lived in investigation. You know, it's very good to talk about how life should be, but when it turns out life is not how it is and you have to deal with the regulator. I think it's a very 3-way rule. If anybody has lived this, you've got to figure out under what provision can you be called out to say you didn't follow this, which is the rule. And there's a rule with IRDA, PFRDA, SEBI, RBI, METI, depending on, it's all interconnected. Neobank is doing everything because I'm a wrapper giving you each of these services, piggybacking on a licensed player. Right. And this point is same for, actually neobanks have nothing to lose. I'll tell you why. The rule is you should have systems, processes to ensure something doesn't happen. Sometimes it pegs it to ISO something, but says like, lawmaking is never follow this because the lawmaker always has to win, which means, look, not my fault. So now system processes should be good. Nobody knows what is that good. How do you implement? By trying to do your best, which is a function of cost. The point Rajesh made, budgeting. So everybody has different standards. And standards keep changing because threat keeps changing, so you're always playing catch up, right? Now exposure, something goes wrong in investigation. At some level, the question that comes, could you have anticipated this happening? I mean, we are aware of bank outages and stop business orders, right? I mean, it's no longer 2 or 3 crore, by the way. Do not do this till I tell you can do it again. Onboarding new customers. That is potentially 2, 3, 4, $500 million exposure. It's quite like how the DOJ or the EU Commission, it's one sweep, I'll stop your business. If you see regulators no longer impose fines, they stop your business for as long as they want to, you're gone in that period. So I think the short point is, I think the hat people wear, at least, who are implementing these standards, is just keep asking yourself, could I have done better as a tech person within any of the organizations, in the whole BFSI value chain, that tomorrow I have to ask a question, and because nobody can cross their heart. I mean, today you can, when somebody gets killed, it's a very binary 0-1 kind of a thing. Like, there's no doubt. Right. Second point, the funny part is when we see investigations, a bank, a payment aggregator, multiple payment aggregators, a platform, and a merchant, players involved. It's amazing how at least nobody can ever figure out at what level breach happened. At least as a lawyer, it kind of is a bit surprising. You assume the smarter minds can figure out, but it's just amazing how multiple forensic investigations, you can have the best of the best in the world, forget just India, but nobody can, figure out because, again, I don't know why one can't figure out. Of course, it's too sophisticated. Now, in that case, how do you again protect yourself, especially the licensed players? Of course, the law says you can outsource anything to somebody, I mean, non-code function. Banks aren't in the business of tech. They aren't, the Microsofts and Infosys of the world, so they will rely on somebody else. Either I license something or I give it to you my complete. If I give it to you, the rule says no matter what happens, your neck is on the line. It's a black and white rule of law. Now tomorrow, how do you protect yourself is by back-to-back indemnities. It's like I'll ask you, you're sure, you will ask somebody else, I'm sure, so hope, always the tree picture you all keep saying without elaborating further on it. So net, everybody is hoping on back-to-back indemnities. That's the reality of the matter. If something blows up, non-neobank, unregulated. So line is regulated, unregulated. Unregulated will lose the account, regulated.
They may lose the license. Yeah. It's really scary.
Very aptly put, Anu. I think the point that clearly comes out over there is that, yes, when you look at the ecosystem of banking or neobanking, there is also a significant part that plays in the ecosystem around it, the APIs and the partners that are involved around it. And they, again, will not be as large as giants like the Microsofts or the Googles of the world to invest into cybersecurity and have the bandwidth to really support proper cyber defense frameworks and controls in place. And hence they become a weak, like in the overall ecosystem from a financial structure perspective, and a risk to the bank that is outsourcing or partnering with them. So, Karthik, when you look at many customers today in the banking space who are working with such niche partners, we saw a lot of partners that Pratik called out in his presentation also, that are partnered with the existing banks or are come out with new banks themselves. How do you see that the ecosystem partners are looking at cybersecurity? Are they really considering it? Are they like just waiting for till something happens, they are okay and just keep on working as it is? How do you see that today?
No, I think that's one big, concern in terms of the third and the fourth party that's connected to an entity. In this case, the digital bank, neobank, even the traditional players. I think it's a major area of concern in terms of how do you even have the visibility of who I am connected to. First of all, the inventory of all the third parties that we are associated with, and then figuring out. So today it's not just third parties who are coming in and providing you services. You can't physically see. It's all virtual. It's all connected via the entire API ecosystem. So at times you are, digitally blind in terms of what your third and fourth parties can access. And I'm not saying the visibility is not there, but at times it's assumed that, a certain API connection is made is inherently secure, right? And while we have seen some of those controls failures in the past, where a third party has connected or a supplier has connected to our network using a VPN, we assumed that VPN, a virtual private network, is secure, right? There was a bank where we had done an investigation on, where the bank had taken all the measures to, strengthen the security of the entire ecosystem. It had all the, tools and solutions around Security Operations Center. But it's one of the third parties which was doing, certain development on the cards ecosystem was a vendor based out of, outside of India, right? The only way that the vendor could work with the bank on the cards project was via a VPN. And the vendor and the third party actually got breached at their premises, their systems. And the attackers could actually traverse through the same VPN connection and get to the bank's, core systems, right? Now, was it just because of the third-party breach that they were able to access the bank systems, or was it an oversight that a particular connection or a connectivity is secure, so I have, kind of whitelisted that. So that needs to be, thought through. You also need to think through, and there are, various areas where, banks and other organizations are working towards to really scan what their third party and fourth party ecosystem are from a security maturity perspective. So whoever is, if 100 vendors are connecting, so what is their security posture? So a lot of organizations are taking that view as well. And when you couple this with doing a little bit of more automation and building more intelligence into it with the help of AI ML, then I think it's a winning streak where you could get this activity done in a much more faster way, in a much more efficient way, and also keep building that intelligence in terms of who's the new third party that's connecting to you. So if the third party is going to access your network, then these are the 100 things that you need to check for automatically. And then if it's a certain third party, then these are the number of checks that you probably need to look for in their fourth party as well. So there could be different dimensions that one could configure, but that's primarily the.
So Karthik, I took a couple of pointers from what you just mentioned. One is about ensuring that you inventorize your third parties. Then you're looking at putting a framework in place to actually perform assessments around them, point in time and see how they are doing and whether they are at a mature level, following the standard controls and basics and foundations from a cybersecurity perspective. And then perform periodic assessments continuously to keep on seeing how they are doing. Now, Rajesh, just picking up the same point where Karthik left off, when you look at the connections are constantly live 24/7 when you have APIs exposed to these partners. Do you see a role of AI coming into this space where AI can be adopted and you put a zero trust framework around the entire ecosystem to ensure you're constantly monitoring what's happening? And if you find any kind of anomalies in that space, you can react much faster rather than wait for your next audit after 6 months.
So exactly, so that's what he was mentioning before concluding, that monitoring is something. If you're whitelisting it, you probably are bound to, it's bound to happen someday, okay? So even if you're whitelisted, if you have a mechanism of observing the traffic, monitoring what is coming your way, then you should define those rules. Zero trust is a good solution, but according to me, it's not something which a tool can achieve. Zero trust is a journey. For any of us who would have even touched that, we know it's a multi-year journey.
Yes, more of a framework or an approach rather than being a solution or a tool in mind.
It's a journey wherein you can start with, okay, let me apply zero trust to my networks. Let me go then to a devices or to the user identities. So there are various stages of it, but yes, it does help you contain that exposure. It may or may not help you prevent everything going wrong, but with a zero trust, with a micro-segmentation, at least you are able to isolate certain environments or create certain pockets that a compromise of one set of assets is not going to impact another set of assets. So wherein you are actually containing that exposure big time, definitely it helps. Second thing which I think also becomes important in today's world, which used to be typically a periodic assessment, say identities or what is passing through, what vulnerabilities exist. There used to be a periodic process of doing those assessments, maybe once in a quarter, once in 6 months, if it's not a critical asset, once in a year. Today, the need is going for a continuous assessments. Keep doing those validation, keep checking those identities. Are those access which are given out, are they required on an ongoing basis? And that is where the zero trust principles flow in, that I will assume you are breached. That is what the principle of zero trust say. The guy who is coming in is assumed to be breached. Now prove yourself before I give you the next access. Do I have access control policies so granular, even if I don't have zero trust? Can I confine my policies in such a way that I don't trust when a connection ends at the VPN gateway, that he is now a king of anything that he can do? Can I control that? Can I navigate through? Have I got those alerts separately generated for some of these? Which is a lengthier process. It's not something which you can just put a trigger and it will start working, because the number of events that are getting generated will be huge. Now, again, AI comes in there to prioritize, this doesn't look usual from this IP or this host. That is where it will help you prioritize and give you that upfront, that particular issue in your SOC or your monitoring engines, which typically would have been a needle in the haystack and just left out. The low and slow attacks are very difficult to otherwise capture. These are the things which a AI engine or any machine learning, supervised or unsupervised, will actually help you unearth a lot of that stuff.
Thanks, Rajesh. Anu, now with regards to cyber attacks are constantly growing exponentially now, especially in the COVID world. We've seen that they've gone way above the charts. Now, at the same time, we are looking at countries are adopting a lot of new regulation with regards to data security, data privacy, data sovereignty, and the likes. How are you seeing that you look at from our national job security perspective as well as our financial industry perspective, that regulations are helping with regards to this objective?
Actually, great question, Dilip. So I think, if one were to look at a white canvas, right, and put yourself in the regulator's shoes, first question is, what can you do before you decide to do something because of cross-jurisdictional issues, right? Firstly, what would I do? I would ensure that routing is within India and not outside of India. Two-factor authentication, if you see, was exactly the August of 2014, which led to many global platforms tying up with Indian gateways because they couldn't take it outside and bring it back in, right? Second, of course, localization is important because if I ask you to give me some data, and normally it's not just the central bank, it comes from, law enforcement is so wide, right? FIU to ED to NIA to, there is CFT, agencies who we don't hear about, for that matter. Now, if they ask a financial services regulator, get me this data, and they reach out to somebody at some email which is in some other part of the world, and it takes 7 days to find somebody to talk to, i.e. how do I really discharge my burden to my government as a regulator, therefore data localization. So at least keep it here. Why the rule around having a nodal officer, having a principal officer? Somebody has to be here also to catch a neck, but therefore, what was the whole debate around, if you see IT intermediary rule, what was the trickiest thing? Nodal officer liability. Technique, it was why do we see, it was in the papers, a lot of tech companies had nodal officers appointed who resigned within a few months when maybe they didn't realize what they were getting into or whatever the reason might be. And I think just ensuring that, look, okay, take a step back. Yesterday I was on a flight and read this book called Pegasus. Brilliant book, must read for anybody in this sector. Lauro, Richard and Sandrine, the two guys who had discovered this, and they were tipped like the Panama Papers, where some 2 million terabyte data was here. Here there were 50,000 phone numbers, and they were told, look, these guys are doing spy, all royal and enemies of state and state. It's a fabulous concept. If you can enter somebody's phone and do whatever you feel like, what cyber security are we talking about? And we don't just kills the debate, right? So at some point the state is realizing that, look, this is beyond normal enforcement. In a dealing room you can have standards. Don't take the phone, don't do this, don't do insider, don't do front running. The known world. In the world of finance, especially pushing money, when money leaves an ecosystem, I think states are realizing it is not possible to just expect the players, because God knows what is going on, right? So the only way they can firstly, nobody can control it at this point in time, maybe in future. The way to contain it is to have people who at least can tell you what has gone wrong, step one, who to find to talk to, how to ensure data is broadly here, how to ensure lastly that data, important data, especially financial data, right, sensitive personal data, which is again the critical piece, resides with people over whom I have supervision. It is not that anybody can open a company with $1 lakh in paid up capital, launch an app with one coder, get it in some of those, Apple versus Google stores, and then start doing whatever. So I think, it's a classic thing about that parable, blind man and an elephant, trying to figure out, what this whole animal is. So, and this is an evolving debate, which is why probably, for practitioners, actually I don't envy, the role you all play, because at some level, you're selling a reputation. But this is something where, one outlier black swan event can just take the whole house down.
Very true. I think I couldn't agree more on this one because the regulations are definitely there to stay. They are there to protect national security as well as the organization or the industry security. But at the same time, do you see that these regulations, which are traditionally designed, are becoming more of a burden for the new age banking and the smaller institutions which are coming in this space?
So, there are two ways of looking at any regulation worldwide. This is the classic East versus West debate. West is more laissez-faire, which is more contract-driven, no law, no exchange controls in Europe or US. When those lawyers talk to us and we talk about foreign direct investment, it is a nightmare to explain to them sectoral caps and entry routes and conditionalities and those things, right? Asia is more hard law. If you see, we don't respect contract, we respect relationships, and therefore it's more hard law. So, one way I could look at it, depending on which culture I belong to. As a Westerner, I may look at it saying, oops, you're making my life difficult, ease of business is not good, all of those things, right? The other hat you can wear is regulation is a competitive advantage. It kind of, you look at digital lending. I think digital lending, if you see just in terms of players involved and data flow and money flow, things could, from a going wrong standpoint, a lot can go wrong, right? Now, it kind of, regulations have weeded out probably 10, 20,000 players into good, bad, ugly. So at least mature players always look at regulation as a competitive advantage. In fact, they want to be a part of rule making. I think there's this famous episode in Yes, Prime Minister, where the UK PM, fictional, says we would much rather be in EU and break Europe as opposed to being outside and not, have a say as to how it is broken. So, i.e., be a part of rule making as opposed to being given the final draft.
Interesting.
Cotton trade or one of those France versus UK debates.
Okay. Interesting view, in fact. So I think to summarize, eventually, traditional banking or new banking, has the same kind of risk which is there when it's coming to, because it's a complete online channel. It's a way of doing business. Now, investments definitely are required. Does not mean that it has to have heavy investments when it comes to the size of the organization. The investments can be done smartly. It can be done based on the risk appetite. It can be done with regards to what is the footprint of the organization and how it is interacting with its ecosystem, interacting with its users, interacting with its regulators. So keeping that in mind, I think I'll open up the forum for any questions from the audience. And we'd be happy to answer if anything specific that you'd like to ask on. Yes, sir.
Thanks for the, I think, very, very well organized debate. Actually, it's something which came out with most of the points which I had certain doubts in mind. I think it clarified. But, very specific question on, say, assuming there are incidents on cybersecurity. Today, even as an industry, what we see is that, we classify it as P1, P2, P3 and all that. But the response time in terms of the difference, incidents being handled in a different way. But all are dependent upon, in an ecosystem banking, there are multiple players who are involved. And most of the times it's like first acknowledgement of the issue, and then in terms of first identifying what is the analysis, what is to be done. How do you see this problem in an ecosystem banking where, there are so many players involved, and how do you, in fact, even classify, and how do you even, handle those incidents and also close the vulnerabilities and close the whole incident? Is that a great challenge which you all see?
It all depends on where is that originating. I mean, this incident, whatever we classify, is it within your own space? I mean, I'm not sure. So which organization do you come from, if I may ask?
I work for Tata Industries. We are an NBFC CIC,
Fair
so we are not exposed to public in that manner. Yeah.
Fair enough, that's okay. So if you are an entity which is a bank, for example, and the incident happens within the bank, it's much easier to do an impact assessment of that. you come to know upfront. I mean, moment the incident happens, some flags will be raised either from IT, if it is IT triggered, if it's a cyber triggered, or from a fraud perspective. The various alarms which sensors which are there, or the sensing units which are there, will raise an alarm, and then you can immediately start your process. The issue starts become more pronounced if it is, as you said, in the ecosystem, which means one of your partner has got that. There, the issue is practical and true, because many times they will not proactively even let you know, right? So they will first hold back and figure out for their own space, what is it that has gone wrong? Does it need to be remediated? Does it need to be informed? What is the impact assessment? All those regulations start first in their own mind, because there are regulations also which go with incident reporting. In the ecosystem, if you have your partners which have got breached, the onus is on the regulated entity to go and report to the regulator. Plus now the certain has also made mandatory for every body corporate in the country, that if there is any incident that happens in your organization, you have to report to them within that 3 to 6 hours time window. So in interest of everybody, this is pressurized, but when the incident happens at the partner's end, it's not that you will come to know within 2 to 6 hours of that happening. That doesn't happen, to be honest. While we may try through our contracts, our engagements and all that, but again, first of all, they will not agree to that contract term, because it's not from the time of it happening, from the time of they coming to know of that incident, and they are able to ascertain that this is for you. So which may be maybe 24 hours after that. Impact assessment, again, if it is interrelated elements, the first impact assessment they will do to figure out, then they will report back to the organization. You do your impact assessment basis there, what has gone wrong, and then you report it. So this is a complex process if it happens at the vendor end. Maybe certain times you are not able to immediately bring in a mechanism of containment. Say, knowing is easier. Containment and the remediation is much more difficult. The corrective action sometimes is much more difficult, because the investigations and all that, you have to rely on that ecosystem partner. So there are a lot of dependencies which start creeping in, which makes some of these incidents, if it is really a material incident, it typically would be ending in a week. If it is a non-material, but it is for him it is, or the customer it is not material, customer in the sense the vendor it is not a material one, but for the bank it is, still it will take you 2 weeks for getting that investigation report and a clearance that everything is working fine. The closure of that, you can't have a 8-hour time window what you have for your own P1, P2. Say what you have for your own ecosystem, for your own environment, in your own enterprise, you have certain timelines, time to resolve, time to respond, and all that. When it's in the partner, those things don't hold true. I mean, it's a practical challenge, which is a fact. You have to keep, first of all, I think there are 2-3 corrective actions that primarily, preemptive corrective actions rather, I should say, we should do, and for that matter, we do some of them. One, make these partners understand what is an incident for them, because many a times, most of these partners are not digitally savvy companies, because you have outsourced something which is a typical portion of work. They don't understand what is the impact of it. So make that session, like you make your guys aware, your team members aware, your board aware, have a workshop with your vendors, make them understand what can go wrong, what is it that they need to report, have a trust channel established. And second, create a help desk within the environment wherein they can seek support also, and primarily the first thing which comes to their mind is confidentiality of that. So we'll also have to create that channel, so that if there is something going wrong, we are together in it. We will try to make it, if it is not impacting, even if it's not impacting, if there's a learning that you can share with them, you can help them handle forensics better. Make that equation, that relationship would actually help you to know what is going wrong in each of these environments, and may be able to contain something in the long term. But there's no silver bullet that primarily, and practically in ecosystem, these things will happen. And today, and if 5 years down the line, each of the banks would have at least 300 to 500 partners. Today, I mean, larger banks today have it, but 3 years down the line, I think every bank will have 300 to 500 partners which are connected back into the environment. One or the incident keep on happening everywhere. So this is an area which will continuously need more and more focus on.
Some blame for those losses lies with us, because actually it gets very difficult to figure out, in fact, having done these investigations first, you do a forensic internally to figure out what has happened, extent of harm. See, because what is reporting? Think of a platform or a merchant or anybody outside of the license ring. Moment you've reported, right? It is good and bad also. You cannot report half-heartedly because the reporting itself makes you look like a fool. So, when you want to report, you want to be comprehensive. And then which means, bureaucracy and organizational, lawyers and forensics and, internal parent. In global organizations, we might think it's far more complex. It's a reputational global brand they're putting out on the line. And of course banks.
And accepting culpability in case it is. Yeah. So that's also an important thing. Yeah.
No, with the PDP coming in, the personal data bill, it's going to put minimum 50 crore up to 250 crore fine on you. I mean, so people will be much more cautious. At the parallel front, they are insisting that moment you come to know, you report as a suspicious event, then you can investigate. As he's saying, that's where is a very, very difficult decision that sometimes is to be taken.
And then the trick is, it's quite like the whole very public, so one can mention it, the whole Cambridge Analytica. If it's discovered later, you will be taken to the cleaners. So might as well, just maine bataya as opposed to you find out.
During this whole process, the bank still remains vulnerable. That's the point which I was trying to make.
That's right. So till the time you don't know it, till the time you don't know it, you're vulnerable. Moment you know it, you'll have to start. Maybe, for example, if there is a partner that has got breached or there is suspect that is there, the first thing you will do is cut his cord. Let the channel stop. I mean, stop everything. You may even get extra cautious and say, boss, don't even open emails. Don't send emails to that domain. So let me block everything on the perimeter. So you may take those hard calls at times before you start getting that comfort that no, things are not as bad as it was supposed to be. So it's a call that you'll have to keep taking as you come to know more about that. Any other questions you can take?
I guess we're good. Thank you so much.
Thank you
for your time.
Thank you so much, Mr. Dilip Panjwani, Mr. Anu Tiwari, Mr. Karthik Shinde, and Mr. Rajesh Thapar for this highly informative discussion. Thank you, sir. Thank you. May I now request our Director General, Mr. Sandeep Khosla, to present the mementos to our panelists as a token of our appreciation. Thank you. Mr. Tiwari.
Thank you.
Mr. Thapar. Mr. Shinde. And Mr. Panjwani. Thank you so much, everyone. I now invite Mr. Abhijay Diwanji, Head Financial Services, EY, to deliver the vote of thanks. Sir.
Thank you, Bombay Chamber, for organizing this, of course, but more importantly, thank you to Sainzi for sponsoring this event. I'd like to say it was a fantastic event across today with all our speakers, beginning with the regulator, who was cautious in his approach, which he always is, moving down to some professional bankers talking about how to do digital banking, and that was an interesting concept, down to neo-banking with all the excitement that Pratik showed around what the next generation wants and how banking is going to be able to cater to, down to the fact that what agriculture can do in terms of refining banking and where we need to put the push really. Because what we saw, that while the next generation is eager to move, and it's a compulsion of the banking industry to move towards them, it's the farmer who doesn't really know what he wants, but we know what he wants. And it's our ability to reach out to him and get there. I think that really came out well. And finally, the whole concept of what are the real risks and how the CISOs are dealing with it. I thought the last session was the most exciting in my view, because while everybody talks about what can happen in a gizmo fashion, the underlying risk that comes about is amazing. And you guys talk about the kind of volumes that AI needs to handle. And just the other day, I was with Ashish Chauhan, the CEO of NSA, and he spoke about how he manages the world's largest volume of transactions happening, and being accountable for settlements and statements reaching people on a regular basis. He says, you can't imagine what happens. And I remember Karthik and me going to BSE, when the BSE shut down operations for a couple of hours. I think banking is going to head towards that. And we're going to see loads, while data is the new oil, that oil is gushing out, very frankly. And it's your ability of people like you to control that oil gushing out is really going to lead to a more reformed and a more efficient banking system. But I think with that efficiency comes that one big risk, which can actually kill all the efficiencies that you've achieved over a number of years. If your data goes haywire, or if your banking operations go berserk, or your balances start vanishing somewhere. So our dependency on technology is going to be so high that it is in our interest that we move ahead cautiously. With that, I'd like to thank Sandeep and team again for organizing this. Thank you very much.
That brings us to the end of today's conclave. On behalf of the Bombay Chamber of Commerce and Industry, I would like to thank you all for taking time out of your busy schedules and for helping us make this event a great success. We now request, and once again, we also like to thank SignZ, our sponsors for this event. We now request you to kindly join us for the networking and dinner session. Thank you so much. Have a great day.